the Faculty of Economics and Business, University of Indonesia, FEBUI, is a modern, dynamic, and welcoming campus, a place to study for the nation's future leaders. Situated in two strategic locations, Depok and Salemba, we are fully committed to contribute to the development of knowledge in economics and business, and to nurture future leaders with a sense of social responsibility and the ability to address global environmental changes. For over 65 years, we have produced the country's best graduates that will potentially play important roles both in the Indonesian government and the private sector.
So my name is Thijs Hesselmans, I'm from Blanda, and one of the many things I like about Fakultas Ekonomi and Bisnis Universitas Indonesia is that the campus is really green. It's wonderful.
In the future, we are aiming to become Asia's leading economics and business learning center, which contributes to the development of Indonesia and the global community. FEBUI has three departments: the Department of Economics, the Department of Management, and the Department of Accounting, with specified courses such as
At Sunway University, we have traveled the world seeking out the finest educational opportunities, allowing you to experience a world-class education closer to home. Featuring international collaborations with Cambridge, Harvard, Oxford and the University of California, Berkeley, alongside partnerships with the award-winning Lancaster University UK, Le Cordon Bleu Paris, Alibaba Business School and Massachusetts Institute of Technology. At Sunway University, the opportunity is yours. Sunway University, truly a class above.
Ladies and gentlemen, the symposium is about to start. We would like to ask you to turn off your microphone. To the honor, Professor Raymond McNamara, Dr. Jasapi Singh Jojinder Singh, Dr. Kakan Najaf, Dr. Ho Wai Ki, and Dr. Eng Shil Lee from Sunway University, Malaysia, and the Head of Accounting Department, Dr. Ansela Hermawan, and the Head of Postgraduate Accounting Program, Faculty of Economics and Business, Universitas Indonesia, Dr. Yulianti. Symposium participants, ladies and gentlemen, good afternoon and Assalamualaikum warahmatullahi wabarakatuh. Thank you very much for coming to the second day Joint Accounting Research Symposium of Universitas Indonesia and Sunway University, Malaysia. I hope that we were all blessed with health so that we can join the symposium with full spirit. Ladies and gentlemen, today we will hold a general lecture with a very interesting topic and a paper presentation. The first session for today is a general lecture with the topic Recent Development in Sustainability Accounting Research that will be delivered by Desi Adariani, PhD. This session will be moderated by Ibu Professor Susila Devi. Professor Dr. Susila Devi Supya is an internationally well-known researcher in the area of accounting. She has worked and contributed in various capacities for the development of accounting and the accounting profession. She has more than 100 publications in journals, books, book chapters, conference, proceeding, etc., and presented more than 80 technical lectures in various forums, international and national. She was invited to deliver talks in various international forums in Japan, Korea, Bangladesh, Sri Lanka, and New Zealand. She also was invited to work by the United Nations International Standards on Accounting and Reporting to write on a case study on capacity building for the accounting profession. Okay, without further ado, I would like to invite Professor Susila to lead this session.
Thank you, Nur Aulia, for that kind introduction. Good afternoon, everyone. Thank you for being here today for this session. Let me just introduce the speaker for the session. Dr. Desi Adriani is a lecturer and researcher of, I lost my, what is this going on? She's a researcher with the University of Faculty of Economics and Business at University of Indonesia. Let me find, my notes just disappeared. Okay, she holds a PhD from Victoria University, Melbourne, Australia, and her study was funded by the Australian Award Scholarship, and she's been actively involved in several research. Her research projects on sustainability accounting, ethics, and gender. Most of them are multidisciplinary perspective. And she has received several research grants from the Indonesian Ministry of Research and Higher Education, from the Chartered Institute of Management Accountants, and from Universitas Indonesia. Her research has been published in various reputable journals, such as the Journal of Cleaner Production, Sustainability Accounting Management, and Policy Journal, Meditary Accountancy Research, and Social Responsibility Journal. Ladies and gentlemen, let me now invite Dr. Desi Adriani to give us her talk. Thank you.
Yeah, thank you, Professor Susela. Good afternoon, ladies and gentlemen, Bu Ansela, maybe Professor Ray is also here, and also our fellow students from UI and also from Sunway University, and maybe also from other universities or other parties. I'd like to share my PowerPoint presentation. Wait a minute. Okay, I hope you can hear me clearly and also see my slide completely. So my topic is about recent developments in sustainability accounting research. If you happen to be a sustainability accounting researcher, I believe that maybe you have been familiar with several topics that I will discuss today, but let us treat this material as a constant reminder, yeah, whether we have applied these topics as our in our research, and also in our daily practical life. Yeah. So this is the topic that we will discuss today about Anthropocene accounting, and then the ongoing debate and process of the harmonization of sustainability reporting frameworks and standards, and also other issues. Maybe this is not really recent, but I think it will be very useful for us to know the process so far, yeah, and what accounting has involved so far in the theme of SDGs. Okay, so this is the first one, accounting for and in the Anthropocene. Basically, I took the materials from a journal, yeah, Sustainability Accounting Management and Policy Journal. They have just released several call for papers, and I think that we can see the call for papers as some efforts to make the global awareness, yeah, to raise the global awareness of several recent issues. And you can read further on the journals and also in several references. So what is the Anthropocene? Anthropocene is a period, epoch, or a time, yeah, where humanity has become a force or factor that influences the planet already beyond various planetary boundaries. Actually, I think Anthropocene is not an era that has just emerged today, yeah, or emerged recently, but actually it has been, the awareness has been raised maybe since 2010 or something. But because of the COVID-19 pandemic, this term, the Anthropocene, has been largely accommodated in the academic field, including in accounting. So why we need to talk about the accounting in Anthropocene? Because so all our efforts to create sustainable future have been insufficient, as proven by the accelerating degradation of global biophysical indicators. So we can acknowledge that there has been abundance of research in sustainability themes, yeah, in sustainability topics. In accounting, maybe we have largely involved in case studies or maybe content analysis of the company's reports, but degradation of environment has still happened. But of course, this is not to undermine the efforts that we have done so far. Only the talk or the discussions as a constant reminder, yeah, that the problem still persists, and we as accountant can contribute to the not to the problems, but to the part of the solutions. And then, yeah, as I have mentioned before, COVID-19 can be classified as a paradigmatic example of an Anthropocene disease, because with the high mortality rate, and then also it's not only impact the specific areas actually, but it also has become global, yeah. So that's why the Anthropocene era or period is not only the environmental degradation that have influence on social on society in specific areas, but it has become global problems. And then in the literature, some academicians have also discussed about the role of accounting, and we have acknowledged that the accounting scholarship as well plays to both better understand reasons and drivers, yeah, or determinants, yeah, of sustainability development, as well as to support change towards improvements. And also the social, environmental, and sustainability accounting have so far focused on analyzing drivers, consequences, and process. Yeah. And just like our students have done the research so far, usually we focus on the drivers and consequences. However, the link to planetary boundaries and the global vision of sustainable development has not been in the focus. And it is suggested in one literature that accounting research and practice can help to fill the gaps, yeah, by providing suggestions on mitigation and adaptation. So it means that We cannot just be silent, yeah, as an accountant and just doing our job to calculate the profits and something, but we can also contribute, yeah, to how to handle these problems through mitigation and adaptation. The first one, mitigation means that we would like to contribute to fix the problems and make the planet livable using an accounting framework with, I believe, not only evolutionary, but maybe revolutionary, yeah? Creating an economic and societal turnaround. Is it possible or not? Yeah, maybe there are some discussions that say that capitalism has bad impact on the environmental and social justice, but because capitalism has already exists, yeah, for years, for 1,000 years maybe, so that maybe we don't need to do the radical change, but we need to complement the system, yeah, through the mitigation and adaptation framework. And then, for instance, we can explore the avenues linking accounting with frameworks such as multi-capital accounting. Actually, this has already been raised, maybe partly by the emergence of integrated reporting that acknowledge the multi-capital that should be reported by companies, and also through donut economics. Maybe some of you have already been familiar with these terms coined by Kelly Raworth in 2017. To not overshoot planetary boundaries and evade shortfalls with regard to social foundations. We will see later about the diagram, yeah. And then solutions to radically reform the way companies are managed to need to be emphasized and fostered. And maybe we can also remember some concept in our economists today, yeah. For instance, about the growth, but there is also alternative concept, degrowth, yeah, and also efficiency in economics, and maybe efficiency in economics has the opposite side, yeah, with the opposite definition with efficiency in terms of environmental sense. So we can see further on the donut economics here. So from this diagram, we can see that our planet has the boundaries, and if we overshoot the boundaries, then it will create several problems such as the climate change, yeah, ocean acidification, for instance, air pollution, and also the freshwater withdrawals, for example. Yeah, there are so many problems that can happen here. And then we have the ecological ceiling here, and then this is the social foundation. The green diagram here represent the safe and just space for humanity, and that's why we are suggested not to cross the boundaries here, because if we cross the boundaries, then it will create the problems, overshooting the boundaries here. Yeah. And we can see the something like the hole in a donut. Yeah, there are several problems here: water, food, health, and then networks, housing, and several basic needs, yeah, for human. And if there are shortfall in this aspect, then it will become the social inequalities will occur, or there will be some groups or communities that will suffer from these conditions. So that's why the donut economics try to go hand in hand, or maybe I don't know, I'm not really confident to say to replace capitalism or something, capitalism economics, but the donut economics try to mention or try to remind us that we cannot just place our profitability or our economics objectives as the sole objective of a corporate or of an organization. And then criticisms, yeah, for the donut theory to work, people would have to magically become indifferent to how well we do compared to others, and not really care about wealth and income. And is it possible or not? So let's think together, yeah. And then what should be done to make the radical change possible, and what changes need to be made in the accounting education? So I think that maybe radical changes will not possible, especially at this time, but we can do the changes in the accounting education to raise these problems. I believe that our curriculums has already involved the some kind of environmental awareness in the curriculum of in the accounting curriculum, but maybe we need to not only discuss it as one separate lectures or one separate subject or one separate chapters in certain subjects, but maybe we have to insert the awareness of environmental and social aspects in our accounting curriculum or accounting subjects. And then this is the second role of accounting. It is about adaptation, focuses on preparing ourselves for planetary disasters, but of course, we do pray and hope that there will be no more planetary disasters after this COVID-19 pandemic. So far, the economy and society has been able to satisfy the basic needs, and then this raises the question of what role accounting can play to support best possible adaptation to radically deteriorated ecological, social, and economic environments. So these are the three elements. Well, basically the topic of Anthropocene accounting is still in exploratory stage, and these three elements have been identified by Professor Jan Babington in her paper with her partners. For example, here there are three elements. Accounting practice remains largely the same, but the context in which accounting tools and technique attempt to exert control and support accountability can change to be suitable to the different contexts. And then new forms of account emerge to reflect a changed view of organizational responsibilities in the Anthropocene, and new conceptual tools will become relevant. Especially the tools outside of organizational and accounting literature. So that's why maybe we need more interdisciplinary and multidisciplinary work in this aspect. So that what are the implications? Accountants can be asked to provide information to enable organizational control will be more complex and also more tightly linked to global environmental change. So I think this is the nature or characteristics of the Anthropocene period or era. So it can be more complex and but also more tightly linked to global environmental change. These are some examples. Well, actually, full cost accounting, natural capital accounting have already been developed so far, but in Anthropocene era or in Anthropocene period, maybe the focus should shift a bit. For example, the full cost accounting in sustainability readings, it becomes a tool to engage in accountability linked discussions. But in Anthropocene era, it can become a more salient tool. Externalities could be seen as an early indication of future system shift. So it's not only a complementary tools or just additional tools, but it can become more salient tools. While the natural capital accounting, usually we focus on this type of accounting to focus on the impact on economic systems. For example, we investigate whether the report from few companies is appreciated by the market or not. But in Anthropocene era or Anthropocene period, the natural capital accounting and reporting may gain salience or more salience because sustainability reporting, integrated reporting has already been developed. But usually some research so far show that the reporting are still not really substantive, but maybe in symbolic sense. It means that the report have been produced not as the response to the environment and social responsibility, but only to gain the positive image from the markets or from other stakeholders. And then there are also possibility that context-based sustainability reporting prefigures a possible evolution in reporting. For instance, maybe there is a value-based statements that represents or reflect the contribution that are given to various stakeholders, not only to the companies or to the investors. Maybe it can become the additional report or even maybe replace the income statement. I don't know in the future. Yeah. So, but it is possible once the global awareness of the Anthropocene period. We gain the global awareness of this Anthropocene period. And then there is also sector accounts of impact and sector level responses to vulnerability might be needed. So these are some examples of how the accounting can contribute, yeah, to handle the problems, tackle the problems in Anthropocene period. And then there are also some from a journal call for paper, especially, yeah, you can visit further. This is from Sustainability Accounting Management and Policy Journal. For instance, yeah, by reading this call for paper, maybe it can help us to devise ideas, yeah, research ideas, or what topics that we can accommodate, yeah, to accommodate the problems or to raise the awareness, yeah. For instance, how can accounting support awareness, unveil denial, yeah, reduce uncertainty, inform decision makers, yeah, and guide implementation of mitigation and adaptation solutions. And then how can accounting support businesses to keep functioning? And then how can theoretical perspectives, maybe we need to revisit agency theory and stewardship theory, and maybe the principal agents, we can add principal agents as the environmental, for instance, the environment as the principal agent, yeah, one of the principal agent. And also for the stewardship theory, maybe it is not enough just the task of the manager to steward the company, but maybe to steward the environment, steward the ocean, or something like that. And then how can accounting help to place and maintain mankind in the safe and just operating space? And how can accounting encourage and support fast transformative approaches within the remaining time frame? This is not to make us scared. Yeah, the remaining time frame. If we do not move, if we do not join the movement, then we will see the further deterioration of the environmental, and of course, it will have the devastating effect, yeah, on the humanity. Okay, and then that's the first topic. So the first topic related to the Anthropocene accounting, maybe it is not really new, yeah, because environmental management accounting have been developed so far, but the need of the environmental management accounting is really emphasized, yeah, in the Anthropocene era or period. So that's why the academics mention the Anthropocene accounting, yeah, the requirements or the need of Anthropocene accounting. And then the second, the second topic or the second recent developments is the ongoing process of harmonization of standard setting of sustainability reporting. We know that during the recent past, there has been intensifying discourse on the regulatory work, yeah, needed to converge and consolidate reporting frameworks for non-financial reporting. Even though there has been integrated reporting, for example, but we are talking now about the harmonization of the standard setting of sustainability reporting. And IFRS have been worked so far, and they have released the IFRS Foundation consultation paper on sustainability reporting. So IFRS do not want to only contribute to financial, but also now they have the willingness or maybe ambition in the in the quote that they want also to contribute to the sustainability reporting. Puts forward an agenda to create a sustainability standard setting body with the aim of reducing complexity, and achieving comparability in sustainability reporting. So that they will also work with several bodies such as the Sustainability Accounting Standards Board, and then also this movement has been green traction, yeah, and also has been supported, yeah, from national and transnational regulators. But still, there are pros and cons of this effort to harmonize the sustainability reporting. The pros is that there is an urgent need for global sustainability standard setting body, and financial materiality should be paramount in the determination of what to disclose. So they emphasize that financial materiality should be the top priority. And then consistent and comparable metrics should be needed as the top priority too. But this is the opinions that contra the pros. Yeah, for instance, here a lack of regard for different users, yeah, of corporate sustainability information. So the effort to harmonization is viewed as an effort to just prioritize the investor as part of the stakeholders and disregard the interest or the need from other stakeholders. And then there is also a lack of analysis of the alternatives other than harmonization. And there is also overestimation of the expertise and function of the IFRS. I mean, the cons party maybe viewed that IFRS should only be focusing on the financial reporting. And also there are also mischaracterization of sustainable or ESG financing. So these are the various pros and cons so far regarding the harmonization, and we will see in the future whether the single standard can overcome or can give solution, yeah, to the problems of environmental degradation or not. Okay, and then for the harmonization of the sustainability reporting standards, maybe we can also take a look at this several possible research topics or ideas. Yeah, for instance, what are the specific ESG information needs of investors and various stakeholders? Usually, we take into account the ESG score from Thomson Reuters, for example, and we do not really survey, or we do not really know, yeah, what are the exact information requirement from investors and various stakeholders. And also, what are the challenges, yeah, for developing a single set of globally accepted sustainability standards, and what are the unintended consequences, and what are the challenges for report preparers, because of course this will bring maybe some cost consequences, yeah, because they have to adopt to a new framework, and then also the implications for auditing and assurance of ESG environmental, social, governance information. And we can also look at the other possible topics. For instance, will more standardized sustainability reporting lead to greater convergence in ESG ratings, for example, because there are several ESG ratings right now, yeah. And then can the international integrated reporting framework provide an overarching conceptual framework for potential standards? So maybe can we move the integrated reporting forward, yeah, to serve as the maybe example or model of the single reporting for a company? And then how should conflicts, yeah, between the needs of different stakeholders? We know that there are primary stakeholders, yeah, and also secondary stakeholders, and the other typification of the stakeholders. How can we balance? How can we balance the needs of information from the various type of stakeholders? Okay, and then the harmonization also raised questions about the future of GRI. I believe that we have been familiar with GRI, and maybe some researchers fall in love with GRI. Yeah? So this is the Global Reporting Initiative. They have tried to provide one of the most widely used and cited sustainability standards globally. Yeah. So most of the companies globally adopt these standards. Yeah. And then with the possible movements to mandatory disclosure, okay, so there are several movements to or efforts, yeah, to make the disclosures on environmental, social, and governance not only as voluntary but also as mandatory, while the GRI are still in voluntary adoption by several companies, by most companies in the world. So with the possible movements to mandatory disclosure and a single body of standard setting, what could be the consequences for GRI if the Sustainability Accounting Standards Board standards is prioritized? And what are the potential benefits and challenges to work on the basis of GRI for a single sustainability standard setting body? This is in line with the harmonization that we have talked previously. And what would be the impact on sustainability reporting in developing countries? Because so far, companies in developing countries just maybe just adopt the global standards. But I think maybe there is such a local wisdom, for example, that needs to be added to the local standards, for example, so that so even though that the global standards can justify the comparability, but maybe if we look deeply in detail, maybe there is such a local wisdom that should be added to the standard to be developed and to be adopted by companies in one region. Okay, and then this is the last part or last topic, about accounting and SDGs, sustainable development goals. I believe that most researchers have already engaged in this topic, but despite the SDGs prominence in the policy world, accounting scholars have been slow to engage in SDG motivated research. So even though there has been abundance of research that tried to link between accounting and SDGs, but in academic world, it is identified or it is indicated that there have been slow movement from the accounting part. So this gap creates two issues. First, accounting scholarship is less available to the web of knowledge that is being developed about how to enact the ambitions of the SDGs. And second, accounting scholarship is not developing in a way that incorporates SDG related challenges facing organizations. So let's discuss further, what does it mean by this lack of accounting involvement? So because of the lack of accounting involvement in the SDGs issues, then research on the SDGs has to recognize that these goals are interconnected and contain points of conflict. So far, maybe we have focused on one aspect or one goal, or we focus on several goals, but we do not really acknowledge the interconnection, or the possible point of conflicts among the goals. Opportunity to explore interactions and the extent to which accounting systems and reporting either cannot or does not narrate these complexities. So this will create the possible future ideas, And then also accounting scholarship has focused on several issues with depth of insight, for instance, on standard on poverty, goals on poverty, or the goals for the clean water, for example. A potential next stage would be to explore these aspects in concert as constituting the ecological conditions of the SDGs. So it is suggested that we try to explore these aspects in concert, not as the separate goals. And also consider reaching beyond the corporate domain, as organizations with special responsibilities are often in the public sector. So it means that it is encouraged that it is not only the subject or the object of the research is not only corporations. Okay. And then possibilities of future ideas is that the SDGs that focus on the core dynamics linking social and environmental factors may provide greater promise for organizational disciplines. So that a selection of a group of companies that are relevant to the achievement of the SDGs is not predicated on common accounting or finance modes of scholarship. For example, we are suggested to not only include companies listed in a certain stock market or company headquarters in several countries, for instance, but might be determined by how organizations affect a key element of the natural environment. This is also mentioned by the academics in the Anthropocene Accounting. Yeah. So it may be possible that we do not always focus on the public companies that are listed in certain stock market, but also maybe private companies, yeah, because they have the power, or maybe they have several impacts, significant impacts in the determination or achievement of SDGs. And then in general, accounting scholarship has to evolve beyond a focus on the preparers. Preparers means the company or the organization preparers, for example. And also we are suggested, yeah, to move away from studying reports, which have been comprehensively shown to be decoupled from organizational reality. Because usually as I mentioned before, the report usually only portray what the company wants to be portrayed, yeah, as the good image. And yesterday, Professor Raymond also talked about event study. We can also maybe think whether we can use the event study method in this topic. Yeah. For example, if there is some or certain form of reporting emerge as the form of accounting in Anthropocene, or to tackle the issues of SDGs, we may have a look at the market reaction to such reports. So that's how we can engage with the event study method. Yeah. Okay, so these are the reflections. Yeah, as to conclude the talks today. Novel research objects and samples are likely to emerge as accounting adopts an Anthropocene framing. So it is expected, yeah, novel research objects, not only the listed companies, yeah, maybe private companies, or maybe SMEs, for example, yeah. And then inter and transdisciplinary engagements are likely to develop or be required. So accounting cannot walk alone. Yeah. So we have to make the inter and transdisciplinary engagements. And the concept of stewardship may re-emerge, as I have mentioned before. Maybe not only the stewardship theory, but we also have to look at the several popular theories in accounting, yeah, and try to reconceptualize that theory. And the recent developments discussed seem to require more strategic topics and methods to address the issue. And even if we cannot choose the issue for our topic, for instance, because might be it is too strategic and we cannot compromise our schedule for our study, yeah, at least we are aware and try to accommodate or touch the issue in our research as best as we can, yeah, if relevant. And you can find the further discussions in several papers, as important papers, yeah. From Carol Adams, for instance, connecting the COVID-19 pandemic, ESG, investing, and harmonization, and from Professor Jan Bebbington. It's about the advancing research into accounting and SDGs and accounting in the Anthropocene. Yeah, I think that's all. Yeah, this is the last slide. Okay, thank you very much, and I hope this stimulates further discussions on the recent developments in sustainability accounting research. Thank you, Professor Susela, and also the participants.
Thank you, Dr. Daisy, for a very comprehensive journey into the developments in sustainability accounting research. You highlighted 3 key areas that are very interesting. First, you talked about the Anthropocene accounting, which is very, very interesting for us. And then you also mentioned about so you also highlighted the call for papers, for call for research, which will be interesting for those who are interested in this sustainability accounting research. And you also touched the area which I'm very, very passionate about, is basically the political economy of standard setting. And now it has moved from international financial reporting standards to sustainability accounting standards. And you raised a very interesting point about the role of GRI. Will it be ever relevant? Will it be overcome by other players? And so I think this is a very interesting space to look out for. There's a lot of contests in this space of standard setting for sustainability. And also you raised the need for local wisdom on the sustainability accounting standards, which is also something that should motivate our researchers, our audience here, to look at issues of sustainability reporting and sustainability accounting in the light of the Anthropocene perspective. And also the role of accounting in relation to sustainable development goals. To what extent have we incorporated this in our research agenda is also worth exploring. And also you mentioned about event studies, so it links up to earlier yesterday Prof. Ray's discussion about an event study. And I suppose we can also explore events Anthropocene from an Anthropocene perspective and how it has affected the stock market returns for companies. And yeah, overall, you have given a very timely reminder about us, for us to relook at our research agenda, typically in relation to sustainability accounting research. And well, I'd like to welcome any questions on this stage. We still have a few minutes left. We have about 10 minutes left of the session. I see there are some questions, comments on the thing. If you can, at the moment, I can't see the comments because the slides. Yeah, okay. Okay, the chat, there is some question on the chat, whether there are recent, who is Albert Octavian has asked whether there are any recent call for papers on SDG. I think Dr. Daisy, you might want to expand on which journals that you were referring to that had calls for research on sustainability.
Oh yeah, okay. So this refers to question from Benedict, is that right?
The question is from, no, the second one. Benedict made a comment that both the IIRC and Sustainability Accounting Standards Board have intention to merge. And that's what I refer to as the political economy of standard setting. And what Albert Octavian wants to know is which journals he can submit his papers on SDGs.
Okay, yeah. First of all, thank you too for Benedict, for the comments, and for Albert for the questions. Are there any recent issues regarding the disclosure of sustainable development goals in the company's sustainability reports? Yeah. So far, we still use the content analysis method for the to analyze the disclosure of sustainable development goals. And the topic or the discussion themes that I have discussed so far, that many papers from leading academicians call for some kind of a shift from just only reviewing the disclosures to really look at what the SDGs mean to the company. But of course, I do understand that this means that we have to gain access to the company. But if we can only do the content analysis to review or to analyze the SDGs effort by the corporate or the companies, maybe just try to be more critical, for instance, to know what aspects that have been emphasized by the company. And but there are several journals that are very kind to know the SDGs, especially in developing countries. Yeah, for example, the maybe social responsibility journal or sustainability accounting, management and policy journal, or you can also try several accounting journals. Yeah, because you write or you research about the disclosures, which is really related to accounting. Yeah. So that's all for Albert. Professor Susela.
Yeah, there's a question from Kakan whether you believe that the sustainable development practices disclosed will improve environmental, social governance quality. He feels maybe firm may be disclosing all the sustainable development practices variables, but the quality of the SDGs is still poor. Do you have a comment to that?
Okay, yeah. Thank you, Dr. Kakan Najaf. Yeah. Well, I think we cannot really disregard the disclosures efforts made by the companies. Yeah, we still have to appreciate the efforts, but we require or we should try to encourage them to be more to be getting involved, yeah, to get more involvement in the SDGs area or ESG, environmental, social, and governance beyond the disclosures or reporting, because the quality of the disclosures might be still poor, yeah, because not all companies have enough capacity to report or maybe to prepare the report in line with the standards. But we hope that there is some progress. Yeah, for instance, that if they can allocate the funds for instance, for the profitability of the companies, for the board of directors or board of commissioners, for example. So why can't they invest more funds into the involvement, more substantive involvement to the SDGs or ESG themes, yeah, in their company, so that we hope that the research that found the disclosures are only a symbolic aspect or a symbolic effort from the company can be reduced, and we can be happy that the disclosures are more substantive in nature.
Thank you, Dr. Daisy.
Yeah, thank you.
I think you have
Professor,
another question from Ari Rahayu. She wants to know whether sustainability reporting will be a greater success if IFRS or EIE gets involved in enforcing the standards.
Okay. Well, thank you, Ari Rahayu. Yeah. I agree with the comments that the financial materiality should not only be the top priority for company to discuss or to decide on the items to disclose. Because if the financial materiality becomes the only guidelines or the only standard, yeah, to be followed, then we will see that maybe some aspects will not be reported by companies, while it is important for the other stakeholders. And we know that IFRS, or maybe in Indonesia IAI, Institute Akuntan Indonesia, the logic applied is towards more on financial aspect, and hence we applied the financial materiality. So it means that maybe if the companies are fined or sanctioned, but it is under or below the materiality, the amount of sanctions or fine is below the materiality threshold, then it will not be reported. While such information, for example, is could be important for the other type of investors who are really keen to see the ESG performance of a company, or it may be relevant for the other type of stakeholders. So I stick to the point that I agree that if IFRS or EAI would like to contribute to the standards, but they also have to make some kind of justification to adopt or to receive the logics applied in environmental or sustainability accounting. That is my opinion. Thank you, Professor.
Thank you, Bu Desi, for that explanation. I think with that, if there are no more questions, let me just wrap up that. Let me thank Ibu Desi for her very comprehensive and passionate sharing about the sustainability reporting. And I'm also happy to note that later today we have another session on sustainability reporting where Sunway will share our journey in sustainability reporting. So that may give some additional information, and it also points to the fact that companies are still local experience and local wisdom is still important for us, and to see how they are articulating their sustainability journey from the perspective of preparers. So it's important for researchers to have this understanding as well, which can contribute to the international standard setting as well. So with that, let me thank Bu Desi for a very comprehensive presentation, and for all the participants for your questions and for being here with us. And let me hand over the session to our MC, Nur Aulia. Thank you, everyone.
Yeah, thank you, Professor Susela, and also the other participants. Thank you.
Okay, thank you, Ibu Desi, for the insightful general lecture, and Professor Susila for moderating the session. The next session is paper presentations from Sunway University, Malaysia. The first presentation with the title ESG and Performance of Fintech and Non-Fintech Firms Evidence from US will be delivered by Dr. Kaka Najaf, and this session will be led by the moderator Luluk Widiawati PhD from Universitas Indonesia. Luluk is a lecturer at Universitas Indonesia. Her research focuses on the role of environmental, social, and governance, or ESG, information within the responsible investment market. She recently completed in her PhD in finance at the University of Queensland, Australia. She has worked in projects and workshops in the field of sustainability reporting, environmental cost-benefit analysis, and social entrepreneurship in collaboration with various multinational organizations in Indonesia and Singapore. We would like to remind that the duration for presentation and discussion is 30 minutes. So I would like to invite Ibu Luluk HD to lead this session.
Okay, so thank you, Alia. And welcome as well to Dr. Kaka Najaf for these sessions. We look forward for your presentations. So we have 30 minutes, so we'll have 20 minutes for presentations from Dr. Kaka Najaf, and then afterward, I'll probably give you comments on that, and we will give the session to the participant who maybe some of them want to ask questions. So maybe let's go just directly to the presentations. I'm sure everyone is excited to hear that, Dr. Kakan. So time is yours.
Thank you. Thanks a lot. I want to confirm first whether you can see my screen.
Yes, yes, all good.
Okay. So today my topic is about ESG and the firm performance, and the element I have taken for is the, sorry. Okay, the element I have taken is the fintech firms, how the fintech firms are any different than the non-fintech firms in terms of the disclosure of ESG. Today we have a lot of talk about by Professor Desi regarding the ESG and reporting, sustainability reporting. So I think since the fintech firms is quite new into the industry as compared to the other firms, we'd like to see whether they are still following, or they are following with the other firms in terms of disclosing the ESG information. About the ESG has progressed so far during this 1 decade. Almost 189 countries have it. Fintech is have a wide range of sectors, like they are working in robot, RegTech, remittance, P2P, and also the globally we have a fintech adoption index, which has almost average of 64% by the consumer who has adopted the fintech so far. So that being said, I like to see after the so much growth of the fintech, since these firms are getting listed for last more than a decade, I want to see whether they are really following this kind of ESG or not. We can see the significance of the fintech that almost three fintech companies, they show that only the three fintechs like the Visa and the MasterCard, they have better performance than the rest of five biggest banks in Wall Street. So we can see that the fintech has overcome the traditional banks so far as far as their growth. Now, let's talk about the ESG and why it is so much important. ESG helps you, ESG reporting helps you to, risk mitigation. ESG helps you to find an opportunities. Green financing is also, nowadays we have a lot of search on the sustainability reporting, and they are connecting this ESG with the sustainability reporting or GRI reporting. And for the investor point of view, ESG also very significant. So today my research is more about the investor point of view. When you have an investor, how he looks and how he sees this ESG reporting, whether we give any value to this ESG reporting or not. One of the recent, in last year, 2020, we have an event like the S&P introduced an index called S&P 500 ESG. And the moment it was introduced in 2019, within 1 year, it outperformed the normal traditional ESG 500 by 2%. So we can take an estimate that in US, the people really like to invest in the firms who have this ESG information. Now there's a bulk of literature regarding why we need it. It is almost becoming a mandatory requirement by the IMF that the firms need to disclose their information, especially when it belongs to the ESG. Same goes with OECD countries, since Malaysia and US and all other countries are the member of OECD. So they are also emphasizing that the company should disclose this information. We have plenty of literature. This literature I have taken so far recently, but if you read my paper, you can find more literature than this, where they say the ESG impacts positively to the corporate performance. Means firm performance enhances if the firms are disclosing the ESG information. Like we take the first example with the stakeholder theory, the ESG information disclosure to all stakeholders is essential. So this is the first evidence from the literature. Second evidence also say the same. There is a positive relationship between the extent of ESG disclosure and the quality of company disclosures and the firm performance. And before 2020 say that the firm engaged in ESG disclosure boosts the firm value. And the literature goes on, you can read it through. So there are many who say there is a positive relationship, and there are a few more who say the otherwise. He said, no, it's not happening because you spend a lot of money on disclosing the ESG information. As Professor JC was telling, like the company has to take that money out and wants to invest in this ESG. So when the company invests in that ESG, it will reduce its performance and the financial benefits. So few firms say, few authors say that there is no evidence that the company who disclose the ESG and it will enhance its sales or anything, or a few stakeholders say that it maximizes the capital only. So we can find there is in literature there is some contradiction whether the ESG information really enhance the corporate performance or it negatively affects the corporate performance. Theory is also there, says the same. The trade-off theory says that the adoption of the ESG disclosures lose focus in traditional business plan, and it might result in the reduction of the value generation. Whereas the Asukar theory, resource Asukar theory, say that there is a positive relationship between the ESG value, ESG disclosure and the value generation, and as well as the finite model of the stakeholder theory say the same, that there is a positive relationship. So what I'm trying to say here is, so far if you see the literature as well as the theories, there are both ways. One school of thought say ESG reduce the performance, other schools of thought say ESG enhance the performance. But what my argument is, first of all, I like to see whether or not the fintech firms are following the ESG, because I believe that although the corporate board should disclose the ESG information as IMF and OECD said so, but it might be difficult for the fintech firm. Why it is difficult for the fintech firm to follow this? Because they have a different data reporting standard. Their reporting standard is quite different. They are underdeveloping still. They are trying to find out the framework where they can actually disclose the information just like any other regular firm do, non-fintech firms do. And also they are working internationally. So when they are working internationally from one country to another country, the requirement of ESG totally differ. So following and keeping up with all the information and following the specific country rules, that is difficult for the fintech to follow. So we believe that based on this argument, that the fintech firm has shown less ESG information than the non-fintech. Second is that the story which I have built up so far using the literature is that when the fintech firm has less ESG, so we also believe that the fintech firm has less stock market value than the non-fintech firm. So we discussed this goal that we believe that if a firm follow the ESG disclosure, so it might have a better performance. It might have a better stock performance as well. So the investor is more interested in those firms who disclose the ESG information. And since we believe the fintech is not following the rules or not following at all, so we believe that their performance might be a little bit less in terms of a stock. So what we do, we gather data for last 10 years, for 2010 to 19, and then we identify a fintech. Fintech has an index of the fintech, which is called the Financial Technological Index. It has been used by several studies. These are the 48 companies, by the way. Yeah, I have right here. And then we identify the corresponding non-fintech firms. So when we take 48 companies of that index, so we need to use some similar comparison with the non-fintech firm. We use relative valuation. It is a Bloomberg. The whole data is taken from the Bloomberg. So what we do, whenever we have a company A, we write down the company A, and then we use a formula called RV, relative valuation. Bloomberg automatically selects a matching firm for you. They give you a few suggestions based on the industry, EPS, ownership, and credit rating. So this is a Bloomberg feature which we adopt. So I go through these companies one by one. Then I use the relative valuation method. And then I take the corresponding firms. So far, I have take a non-fintech of 145 firms with the comparison of 48 from this side. So total sample I have is 193, and these all firms are from the US. So in order to test our first model, whether the fintech is disclosing more information than the non-fintech firm, we use FIN as a binary variable, as a dummy variable, and we check the disclosure, ESG disclosure. Again, the ESG disclosure we have taken from the Bloomberg. The Bloomberg gives a score of a disclosure to every company. So we take the disclosure score from the Bloomberg, and I will show you the criteria, and then the very next slide, like how they actually rate this firm. Then we include like 5 to 6 control variable. We create a fixed effect for the year, for the industry. This was to test our first hypothesis. For second hypothesis, we take the stock performance, stock return, and remaining equation on the right-hand side is quite similar. For the control variable and the country control variable, we use CPI and GDP. Now, the ESG information, this information I have taken, and this is just a, you can say, copy and paste from the Bloomberg. but I have taken written permission from the Bloomberg to take this copyright for my paper study. So it has defined quite comprehensively, individually, what is E score. When a Bloomberg gives a E, environmental score to a firm, when a Bloomberg gives a score, what is the different criteria they have used, and when you give a governance score for the disclosures only, what is the different criteria they have used, and then they combine all these three and come up with one ESG score. So in this paper, I have discussed this individually as well as total to see whether or not my study report this index. So first of all, I like to show you the sample distribution. The sample distribution is showing the year-wise, and we have a number of firms who is disclosing the information. And you can see as the year passes, the number of firms are increasing. So it clearly indicates one thing, that the more latest we are coming up, the more firms like to disclose the information. So also the Bloomberg score has increased from 23% to all the way to 33.778%, which indicates that in 2019, the more firms are likely to disclose the ESG information. That's another evidence that firms already believe that disclosing ESG information will enhance their performance. Then we run some correlation tests among the variables. We have a set of control variables, and then we have a E, S, G, and combined ESG scores. We can see from the stock, these are all positively correlated. It indicates that whatever the Bloomberg has given us, the score, it really has something to do with the stock valuation. It means that there is a positive valuation, a positive association between the stock and the ESG. We done this study by Pearson and Statesman rank. So both ways they are indicating that yes, it has a positive correlation between the rest of the variables. So Bloomberg might have determined this ESG score based on maybe stock valuation. Next is about the t-test analysis. The t-test analysis is between two sets of groups. One we have Fintech, where we give a value of 1. Then we have a non-Fintech firm where we give a value of 0. The stock, this is a preliminary test. This is like we are not controlling any other control variable. So we can see from the t-test that the value of the stock return for the Fintech is less negative. The mean difference between that, because for example, the mean over here is 3.36 for the stock valuation, whereas the non-Fintech has a mean of 3.53. Environmental, the Fintech has 14.80, whereas the non-Fintech has a lot, 26.53, and you can see the difference. So all these are showing that the Fintech firm has, the t-test analysis showing that the Fintech has less stock valuation, as well as they have a less ESG and ESG disclosure. So this is a preliminary test. Now, I do not believe in a Bloomberg rating. How they disclose this, I have to verify it by myself. Without the verification, I cannot go through, because maybe Bloomberg is wrong at some point. So what I do, I use a CAPM model first, where I use, since the stock return is explained by the market, so I take this market valuation from the Former French website, and then I indulge my all 3 ESG variables. So I run the regression like 4 times, saying I want to confirm whether really there is a relationship between this disclosure and the stock return using the CAPM model. So what I do, I use for E, I use for S, I use for G, and I use for ESG, and I find that all 4 variables disclosure rate, they are positively, they have a positive, significant positive relationship with the stock return after controlling the market return. Same thing I do with the Former French 3-sector model. Same thing I do with Former French 5-sector model, where I control for remaining all 5 sectors like size and the market sector. And I find that the ESG and ESG together have a positive relationship with the stock return. After confirming that the Bloomberg disclosure is positive related with the stock return, now I come and test my first hypothesis, first and second hypothesis together in one table, where I have two models which I explained earlier, and I find that the stock return is, in case of a fintech, the stock return has a negative relationship where E, S, G, and ESG score together. They are less disclosed by the fintech firm. So it makes a little bit sense. The fintech firms who is not disclosing or have a negative relationship with the ESG disclosure, they also have a less stock return. Then what I do, I use a selection bias. What I do is I take the Miller ratio. For the first part, I use a probit model where I skip the fintech. I take the residuals and put into the second model. And then the third model was the same answer that what I have for my basic findings. So this result corroborates with our main finding that the fintech firm has a less ESG disclosure. Then I address the indigeneity issue. I use the GMM model. GMM model helps us to identify whether there is some indigeneity issue or not. I did not find any. My results were the same, that ESG, and the score was less stock valuation, and ESG and ESG together was still less, have a negative relationship with the fintech firm. Now the conclusion, we examine the firm and we find the same results, that they have a less performance, and they also have a less performance, and they disclose less information, ESG information, as compared to the non-fintech firms. It has some policy implications. For example, if you are an investor and you want to invest in a portfolio, you need to decide which portfolio you need to apply on. For example, if I'm an investor with a zero portfolio, I will go for the non-fintech firm rather than the fintech firm, because they are not disclosing the ESG information. So it has a significance for the ESG, also for the environmental policy. Like we like to see whether the fintech is not reporting the ESG information. So we, for future study, we can develop a framework for this study to confirm that there's a proper framework where the fintech firm disclose the ESG information. And in the last, why it's not moving? Okay, this is the last slide I think I have. For the fintech so far, I have published 2 book chapters. I have published with the same data. I have published 3 papers so far in ranked journals. And right now I'm working on the quality of the fintech. So this is my first paper, which is working paper. Another paper which I presented today. This paper was about the disclosure of ESG. Now I want to see the quality of the disclosure. Now I'm working on the ESG individually. So this paper is about my governance for future. So that's pretty much it for my presentation today. Thank you for listening.
Thank you, Dr. Kakan-Najaf, for the exciting presentations. And maybe I would like to applaud you for the excellent effort, especially methodologically. When I read the paper, I was like, wow, I'm kind of amazed, especially in regard to the methodology, the robustness of the process, especially with regard to the use of GMM, to be honest, because I've had difficulties in the past with using GMM. So I kind of would like to applaud the effort here. So thank you, Dr. Kakan-Najaf, for the presentations. Yeah.
Actually, this paper is written by I have 2 more co-authors for this paper.
Yeah.
And I am the one who do the methodology part, and I give them some arguments right on the.
Yeah.
Because that's why I still say it's a working paper. I the last night I was sitting and I was going through the paper, and I feel they're missing some of the main arguments for developing the first hypothesis.
Yeah.
So yeah.
Okay. All right. Cool. So before we already have some questions. So we already have questions from Hamad Shazwan. Hopefully I spell your name correctly. But maybe before we go to the question from the participant, I would like to maybe share some of my comments. So as part of my task as a discussion is to discuss some comments. So I had quite a bit of review comments here. Some of them I think have been maybe addressed in the presentations, but I think some of them maybe can be considered as a further effort for improvement. One of the main things that I would probably like to see more from the paper is to build stronger and a bit more cohesive storyline between the fintech and ESG. You already sort of talk about the advantage of ESG, but then why ESG for fintech is so important. I haven't really get the point, right? At this point, I only see that, okay, there's the two big trends, fintech and ESG, and we are trying to see the connection between the two big trends. But I would like to maybe see, if possible, a bit more a stronger argument on why fintech is important for ESG and vice versa, why ESG is also important for fintech. So I think in there's one paragraph that already sort of mentioned about the issue a little bit of the potential of fintech in contributing to the ESG, by, as you mentioned as well, by doing a bit more easier transactions and so on. So I think it worth to be explored a little bit more to build on the why, and which therefore will contribute to the so what of the paper, because obviously that's one of the two main things about a paper, why you're doing this paper, and then at the end, so what about the paper is that. So that's, I think, one of the main issue that I think are worth to be considered. Also, in regard to the disclosure versus performance, I think in some of the literature, there's still quite a bit of a inconsistency, because some literature use the ESG performance, and obviously in the majority of the discussion you use the ESG disclosure, but there are still some discussions or some references to the ESG performance versus performance paper, which I think it's good, but we really have to differentiate between ESG disclosure and ESG performance. Or if you want to make an argument that ESG disclosure is closely connected to the ESG performance, then it might be worth to mention in the paper that ESG disclosure is probably one of the big factor that can affect the ESG performance. And this is just one maybe small minor issue, because there's in the first hypothesis building, there's one of the contributions that's claim is that we are the one who actually use the quote unquote ESG disclosure score, which is for me quite interesting to see quote unquote ESG disclosure score. What's the difference between the quote unquote ESG disclosure score and the regular without quote and unquote ESG disclosure? So it's kind of more on the sentences build up the sentence. And also maybe more, I would like to see a bit more literature on the result of ESG versus performance studies, which hasn't been highlighted as that's a big part of your paper, the second model especially. And maybe in the working paper, because what I've received is the working paper, maybe a little bit more connections between the models, because you already obviously quite a lot of quantitative models used there. But then I haven't really seen how the model actually explain which hypothesis, which obviously we as a reader can infer, like make our own inferences, but might be better to make clear and explicit connections, like for first hypothesis, we use these models. For the second hypothesis, we use what models. Maybe it's much better to make it more explicit rather than us readers have to implicitly, take it on our own to have our own inferences, and also in the result sections as well. So there's clear connections there. And in regard to the many models that's being used, I maybe have this proposal, maybe considered to just select a few to become the main models, and maybe put the others as the robustness. For example, from my point of view, you used to prove the quality or the informativeness of the Bloomberg, for example, you use 3 models, CAPM, 3 factors and 5 factors, which I agree that it is necessary, might be from the robustness point of view, to actually use all three, but maybe in terms of presentation as the paper, make it more concise, easier to read. Maybe just select one and then maybe CAPM or just 3 factors or just directly 5 factors and just said that, okay, we also do the robustness with doing 3 factors or 5 factors or what the other 2, and the result is the same. And obviously you can always put the full table in the appendix, but to make the paper a bit more concise, maybe just select one of the models, or maybe the same treatment for the other models as well. I think the next one has been addressed, like what is mean by average percentage. Maybe that's what, from my inferences from, I think that may be the average percentage or average score of ESG disclosure score, if I'm not mistaken, based on your explanation in the presentations. But I think the wording kind of make it a little bit more confusing when I read the paper. And in terms of model as well, this one is a bit interesting for me, because for the second, I think the second hypothesis when you're comparing the ESG and firm performance, you use the fin dummy variable, but you also include the industry fixed effect. So if there's any time, maybe there's
because
more.
Within Fintech, we have a sub-industries also, so I take that.
Yeah. And that's actually maybe later on connect with the other point of my comments, where financial industry, which obviously part of the Fintech, and the other industry have quite a bit different ESG disclosure nature and expectations and pressures. So I will actually like to get a little bit more information about what are the industry that these comparable companies have. Because obviously, if you compare the Fintech industry, and in the comparable company, you have oil and gas industry, or you have other, mining industry, be careful that the ESG score for those 2 companies will hugely different.
Definitely.
Because the oil and gas and the sort of industry will have a little bit more expectations. Obviously, they will have more experience in terms of ESG and so on. So actually, I would like to see, because in the Fintech, you already mentioned the number of the company's name, the 48 companies, but we haven't really had information on the comparable companies. I know that you use also industry when you use the relative in the Bloomberg process, the relative companies, but maybe a little bit more explanation on that. And if possible, if there is a huge difference in terms of industry, maybe consider to choose the other industry that maybe is still within the same industry, because at the end of the day, what we want to see is the Fintech versus the non-Fintech. But if it's too big of a difference, then obviously it's not comparing apple to apple. It's kind of a different context altogether in terms of their ESG. So I think that can be considered. Also, in terms of models, I note in the main model that you use the same year for both the ESG and the performance, the stock return. There are some opinion out there that lag models are better used in that case, because obviously ESG ESG disclosure is about that year, but then the information may be considered by investor that will affect the stock return of the next year. There is a gap between when the ESG information is there and when the investor actually use that information and therefore affect their stock return. So there is an opinion of that. I'm sure there are references out there that you can also see. So maybe consider lag models, or if there is a possibility, use the lag models as robustness possible. And in terms of writing of the paper, I also note some, again, typos, some references issue, but I think that can be clearly addressed later on in the paper, I think. Thank you. So that's all. If you would like, I can share the slides to you later on. Thank you. And now maybe, sure.
I would appreciate if you can email me this one.
Yeah, sure. I'll maybe, and then I can give this to the committee, and then they can give it to you.
Yeah, because within this week I need to submit this paper.
Okay, yeah, cool.
It's better to address this one immediately.
Okay, cool. Thank you. And then we also have, again, maybe questions from Muhammad Shazwan. Why targeted US market? Why US market specifically? And then I think it's technical issue about Bloomberg ESG. Does Bloomberg ESG better compare with other terminal? Maybe with, I'm not sure what terminal here means. Maybe then
I think they are referring to the I think he's referring to the data stream and other terminals.
Ah, okay. Yeah. And then maybe you would like to consider the Islamic fintech. Maybe if you have comments on those questions.
Okay. First question is about why I take US market, whether the data was easy. Yeah, this is always a reason that data is easy. But this is very poor explanation to say. Actually, when we talk about the fintech index, if you write it on the Google right now, the firms which it is like S&P, it is all from US. So when I find an index, it was fortunately from the US. And secondly, I show you earlier slides where the investor giving a value to the S&P, where S&P 500 is outperformed by the S&P ESG, because US and European investor really value the ESG information. So that is one of the reasons which I select the US market. Actually, again, it's not like I select the index. Out of that index, all the funds are from US. Second is, does Bloomberg ESG compare? Yeah, it's better. Because Bloomberg takes a comprehensive information. I can send you a detail. They have a whole questionnaire. I myself, I'm a Bloomberg certified analyst. So I worked in a Bloomberg for a while. So what we do, we create a whole questionnaire and we send this questionnaire to the firm. The firm fill up the form and then we recheck the information that is available on the annual report. Then we commit them. So Bloomberg is a little bit better than the data stream and few more. Maybe you have some more solid reasons if I select any other terminal, because I have access for both data stream and the Bloomberg. But I prefer Bloomberg over data stream. Okay, third is, would you like to consider Islamic fintech? I already have like 48 companies, out of which I did not find any Islamic fintech, but this is really interesting. This is one of my things, like to-do list in my future, to publish a paper on that Islamic fintech, because I find a lot of research and the courses on that. But actually, if I talk about US firms, 48 US firms, I did not find any Islamic fintech who fulfill that criteria.
Okay, thank you, Dr. Kakan for the explanation, and thank you, Muhammad Shazwan, as well for the question. So I think we actually have done here. The time is up. We have no time at all. So maybe again, if there's any of you, the participant would like to ask questions, maybe you can chat Dr. Kakan directly here in the chat. I think Dr. Kakan will stay for the sessions after this, and also I think we can connect directly for the comments that I can send you the comments later on. And I guess that's it for the first sessions, and I give it back to Aulia. Thank you.
Thank you very much, Ibu Luluk Widiawati, PhD, for leading the session, and Dr. Kakan Najaf for presenting your paper. We move to the second paper that will be delivered by Idrianati Anis from Universitas Indonesia and moderated by Dr. Ho Wai Ki from Sunway University, Malaysia. I would like to introduce Dr. Ho Wai Ki first. Dr. Ho Wai Ki is Senior Lecturer of the Department of Accounting at Sunway University Business School. She has over 16 years of teaching experience and 10 years of accounting experience and has served clients in the public and private sectors. She is a member of Malaysian Institute of Accountants and a fellow member of the Association of Chartered Certified Accountants. Her research interests are in the area of sustainability reporting, corporate governance, auditing, and accounting. I would like to invite Dr. Ho Wai Ki to lead the session.
Okay, thank you, Nur Alia, for the introduction. Good afternoon, ladies and gentlemen. First of all, I would like to thank the organizer for inviting me to be the discussion for this section. So without further ado, I would like to invite Ms. Idrianita Anis from Universitas Indonesia to present her paper. Her presentation topic is Sustainability Awareness of Banking Institution and its Implication to Operational Efficiency, Evidence from Indonesia. So Ms. Indrianita, you have 20 minutes to present your paper, so you may start your presentation now.
Okay. Okay. Good afternoon. Good afternoon, all guys. Okay. Let's introduce me. I'm Idrianita Anis. I'm a doctoral student, and this is part of my dissertation under supervision of Professor Linda Watigani, Ibu Ansela Hermawan, and Desia Daryani. Are you already see my slide? Hello?
Yes, can see your slide.
Okay. Okay, let me present. Okay. This sustainability awareness, how sustainability awareness in banking and how it implies to operational efficiency. It is evidence for Indonesia. Okay, it is motivated by a journey in seeking how to overcome a negative impact of economic developments. As we know that since the first time sustainable development definition found by the Brundtland report, it is to meet the present need without compromising the ability of future generation. Yeah, and after that, Elkington introduced that economic, social, and environment. It is the basic condition, basic of corporate sustainability, and that is it cannot reduce from the three basic dimensions. But ironically, we can see that after the founding the notion of sustainable development, we experience some incidents, oil spill, economic crisis, monetary crisis, and in 2006, first alarm of lethal flu sounded, and business actors still neglected that, and 2015 it is gained attention of all regulator, international regulator, and all business actor to define what is sustainability goal that should be achieved. Okay, and now we are entering into multi-dimensional crisis that need a multi-dimensional perspective for solutions. Okay, in that case, business as usual will result that 44 century warming by 2050 and slashing global GDP by 10%, and that is why a concern is the transition to low carbon economy or circular economy, and that is the way we can unlock 10 trillion by 2030 and create 400 million new jobs. As so many literature, especially William Nordhaus, this is a Nobel Economy winner on 2018. Develop a model that he found that this model can found a carbon social cost. There is a future loss that occur due to increased carbon emission. And Paul Romer introduced that it is in perspective of endogenous technology development theory, it is strongly developed by technology innovation. And that's why for not mitigating by climate change risk, it could be a decline by 23 decline in GDP by 2100. It is a study of Board et al. Okay, this is why it is our agenda now is as defined by Dow Jones Sustainability Index, corporate sustainability. It is urgency of all organizations to adopt corporate sustainability management and sustainable finance. And in terms of industrial, corporate sustainability management defined by Dow Jones Sustainability Index as a business approach to create long-term share value by embracing opportunity and managing risk from aspect of economic, environment, and social dimension. It is a call for sustainability innovation. And Aras and Crowther firstly introduced environment, social governance. Depart from ASG, this will create financial performance, then that will give adequate risk-adjusted return for the business. That's why in financial institution, sustainable finance defined by the ability of a system to maintain itself indefinitely without a high risk of it dropping to a lower complexity. And so it is cover the definition of self-sustainability, economic, social environments. So that's why it is a concern to transition from finance as usual. There is more orientation on financial to combination of financial, social, environment. So that's why the leading role of financial system is to direct financing and investment to industrial, and every organization should manage their impact. And it is a way that is a way out that's over a supply that move sustainable business. Yeah, in this case, financial institutions have a leading role in a risk risk pricing. By doing so, they will make a supply side over a supply side and create a demand side to transition to low carbon economy. And nudging theory of change by Charler and Sunshine over that banking institution give a base lending rate to for business or project that is lower ASG risk and premium risk for higher SG risk. That's it. Why? What is carbon economy or circular economy? It is the starting idea. Actually, sustainability value creation is the benefit outweigh the related costs that are produced in the process that call virtuous cycle balance. In a linear economy, we have a mindset. Cost of restructuring result in stranded asset, and there is a winner and a loser. And after that, if we move to circular economy, there is a reduce, reuse, recycle. And so this in this case, circular economy is economic system that maintain the maximum possible value of product, raw material, and achieve more by using less, more than just waste management. It covers the entire process of the organization. From upstream to downstream. So a circular economy not only provide opportunity, but it is offer sustainable growth. So to the transition toward a carbon economy cannot be separated from risk that can cause economic instability. That is why we should aware what kind of risk related climate change can classify as a physical risk. Physical risk is a catastrophic risk that come from natural disaster, sea rise level, changes in the geology or ecosystem, and there is a transition risk. A transition risk is the way to overcome the physical risk. It is including the regulation to manage the changes, innovation, technology, and that have disruptive and changes in customer preference. And there is a liability risk too, a penalty resulting from a stakeholders litigation or regulation enhancement. If a bank direct to the finance but not consider ASG training, ASG screening, so there is a potential effect for non-performing loans, and there is a risk for unsustainable for bank. Okay, that's why sustainability business need a paradigm shift, new business paradigm, new opportunity, new risk management, and this is need a regulation. And by the way, Indonesia Sustainable Finance Journey already started by the enactment of mandatory of CSR in 2007. In 2012, Indonesia become a founder and member of Sustainability Business Network. And after that, so many milestones have created. In 2019, there is a pilot project for first mover on sustainable finance, and the significant milestone is 2014. There is a roadmap sustainable phase 1. It is to gain awareness program, a capacity building, and foundation, laying out the foundation of sustainability regulation. And after that, it is continued by government introduce green sukuk, green bond and green sukuk. And after that, now we are entering to roadmap to sustainable finance phase 2. And sorry. Okay, roadmap sustainable finance phase 2. That it is focusing on building corporate sustainability system. So in 2019, Sustainability Business Network classify Indonesia and People Republic of China is a country that is a maturing state in the context of regulation of sustainable finance. And this is these two countries, both countries will move sustainable finance in the world expectedly. Okay, what is in the company level? Our biggest challenge in the new century is to take an idea that sustainability, sustainable development is still abstract and turn it into a reality. This is Kofi Annan said and however. There is no established CSM model that can be used as a reference to date. This situation raised the question about whether banking institution in Indonesia are ready to enter a new era. Okay. It is motivate me to write this to do this research. And actually, sustainability value creation, where to start? Okay, actually, there are two basic assumptions of the virtuous cycle balance. The first is strategy and the strategy. There is a need strategy and for policy formulation by TMT, effectively communication to all of the operational at operational level in order sustainability considered in a routine business process. And the second is comprehension by value by all stakeholders and uses of corporate sustainability performance information in their decision making. And Porter and Kramer suggested company to conduct interdependence analysis starting from inside out approach. Inside out means what company have want to offer to the stakeholders. After that, gain the feedback from the stakeholders, and by the time do the inside out and outside in perspective simultaneously. By doing so, there is a company will know their strategic posture. They will feel the strategy gap and management capability gap. And by the way, Porter and Kramer give where company to start starting sustainability initiative from support activity and primary activity. So many initiatives the company can do by defining their strategy. In a study that found where CSR or corporate sustainability initiative have a negative impact on the performance, it is can be assumed that it is a company incorrectly identify market or incorrectly identify material sustainability issue, or another case is a sustainability project or cannot not fulfill the compliance or sustainability regulations. And that's why we should know that there is institutional infrastructure of CSR or sustainability project. For example, WADOC 2006 said that sustainability project consists of three market business sector that should should fulfill principle of reliable information, assurance, role of consultant, analyst, and movement of responsible investment. While there is a society, civil society that should involve private political party of NGO should provide information in journal, magazine, and can be accessed through online media, and government should comply to regulation in its implementation. So sustainability over an idea, if benchmarked to the practice, sustainability will promote convergence of various corporate governance system. It is a basic of future competitive advantage. Okay, by the way, the talk of sustainable finance, it is improve gradually rather than, it is a step-by-step innovation rather than a leapfrog model. Sunmaker give the framework, in sustainable finance move from sustainable finance as usual, refine shareholder. Refine shareholder at the time. It is the first stage where company begin to refine value, and after that take opportunity to balance, give priority, financial, social, environment. After that, they come to innovation. And the innovation aspect of social environment, it is more than financial aspect. So in this framework, Sunmaker suggested that there is a expansion, a wider perspective of the business from short-term, medium-term, and long-term. And after that, in innovation literature, we take that strategy is based on environment condition, dynamic environment condition. So we are talking about the scenario. The strategy almost we're talking about the strategic continuum. The company follow the continuum that will create value to customer value proposition. And there is by doing so, by conducting sustainability innovation, the company will move in creating the reporting. In the first level, it is a public relation driven, and after that, reporting driven and accounting driven, and the next, the higher is the twin approach involving stakeholders, communication, and accounting. So that's why, in terms of innovation, in terms of innovation literature, sustainability can be explained by there is comply to regulation, legal and regulatory compliance. It is an opportunity to get a transitional change, achieve efficiency, and after that, company will move to the next level. It's transformation change. And most of the study from sustainable company, it is a journey of learning. In some cases, company or sustainability innovation is a resolution of top management team at the time company found a crisis. But most of time, a company starting from something that is easy to apply, and after that, increasing to a complexity and take a sustainability team that is give a potential benefit for the company. And it is it can be explained by dynamic capability theory, and in terms of reporting, we can say that a legitimacy theory. Okay, next. Sorry, I forget the best line of this slide. By doing so, Aras et al. Give a framework of reporting for banking, propose extended sustainability disclosure for banking, should include aspect of economic, environment, social, governance, and financial stability. Okay, then.
Sorry,
yes?
Adrianita, you have 3 more minutes to go.
Okay. That's why how to our main issue is how to make sustainable development come into reality, and sustainable strategic performance balance scorecard over the approach. How to manage strategy. There is a link between operational to a strategy. It is a way to make sure the company can keep the long-term horizon and give give and again maintain their performance, sustainable performance. That's why we study using sustainability awareness is defined as management system that adapts sustainability and link operational activity to the banking business strategy, decision system, capital market. Value of sustainability awareness can be measured from realization of knowledge, fact, which consists of way of how and how bank understand the concept of sustainability. Okay, there by so many regulation from international and national regulation, there are some problem identified. For example, in banking, the economic crisis left a too big to fail dilemma. The policy to offer systematically important for bailout for bank that is fail in their operational system. It is a destructive in nature, encourage moral hazard. That's why it is a need a solution. And 10 years after 2000 global crisis, Indonesia banking still face a low operational efficiency, especially in terms of non-performing loan and cost-to-income ratio. And it is identified as a weak because of weak corporate governance, risk governance framework, technology gap, or low strategic judgment capability, and less of diverse experience, education, expertise. And for example, the initiative on international national then provide a solution because of sustainability still understand as a philanthropy activity that cannot touch substantial problem, substantial SDG and climate change issue, and sustainability. There are many initiatives, but at the same time, there is this show low awareness. And by understanding sustainability as a philanthropy activity, understanding of corporate sustainability performance, it is a kind of a symbolic reporting. And that's why I identify so many research literature, because so many problem in banking. For example, larger bank have lower profitability and high risk. And after that, it is because of TMT interest to keep bank larger in national economy in order they can get higher status and remuneration. And the recent study show that several studies offer there should be the way out. For example, remuneration system based on stock or debt security by Mehran, and capital requirement, risk governance framework, and CSR and corporate sustainability management should be integrated to sustainability strategy. And by the way, study in decision making, strategic investment decision found bias. It is heuristic bias related to decision anchor, framing bias. It is related to interpretation of information. It is consensus bias. It is conflict around a top management team in deciding strategic expenditure for sustainability initiative. And
sorry to interrupt, Ms. Indranita. Actually,
yes.
It's over 20 minutes already. Maybe you go to your last slide to share your findings of your study with the participant.
Okay.
Because it's over 20 minutes already.
Maybe this is identified problem. Yeah.
We don't have time for this. Hey, please share your findings. Here, you don't need to show all this. Just share your findings.
Okay. My research is actually we develop a sustainable corporate sustainability management model for banking, and we create sustainability awareness index for banking. This is a proxy for corporate sustainability management model, and we classify the sustainability innovation level by 3 levels: laggard bank, a neck and neck bank, or higher level of innovation, and first mover bank. And after that, we examine how the awareness affect bank capability to make a transitional change to operational efficiency. And result of our study by using data 10 years from 2010 into 2009, there is an increasing awareness before and after the enactment of regulation sustainable finance. And according to we develop input-output intermediation model by using the estimate based stochastic frontier analysis. This is the result give that our bank by the sustainability innovation stage, banks still suffer in inefficiency due to direct over financing or investing or under investing. They were operating in under their cost frontier. And that's why, and the next for the main model, we examine there are as a component in here: sustainability motivation, stakeholders engagement. We have give the result that sustainability intention have a positive impact to operational efficiency. And as a component, unit alignment, unit organization alignment, and sustainability business case give a negative impact or operational efficiency, and sustainability implementation give the negative impact, and overall negative impact on year now. And by there is a sensitivity analysis. There is a probit model to estimate whether overall sustainability awareness can reduce bank overall inefficiency. The study found it is can reduce. There is an increasing learning capability. Overall sustainability awareness can reduce bank operational inefficiency and have a positive effect on operational efficiency on T1, T+1, and T+2. And so the implication of the research, okay, yes, this is the conclusion. Sustainability awareness, the sustainability awareness, sustainability intention have a positive impact on operational efficiency, and after that, in overall, there is an increasing capability to overcome the problem of operational inefficiency in banking. So that's why it is give the implication for development of the theory. It is partially support dynamic capability theory, transaction cost economic theory, fully support new institutional economic theory. And for banking, there is important three movement. First, avoid generic strategy enhancement awareness by formulating action action plan for sustainable finance, align risk governance framework, especially risk-based performance for TMT as material risk taker, and formalize sustainability and execute strategy, measure and progress, communicate the progress. And for regulator, there is a sign to step up to roadmap to sustainable finance too, that will be focusing on corporate sustainability system. The result will imply a standard setting body to enhance and accelerate the implementation of accounting standard for loan loss provision, especially to improve accountability with new paradigm. Okay. Finally, there is a limitation of this study. First, the GSM model and SR level index were developed and measured solely based on researcher ability to probe the measurement of criteria that have never been tested before, and limitation of subjectivity interpretation. The study used qualitative content that involve assessment of GSM practitioner, and therefore the future study suggested to add an interview with the TMT, and GSM model can be applied to re-examine in other industry sector by adjusting regulation or cross-country analysis. Okay, that's all my presentation. I hope this is an insight for all the audience, and I gained some feedback to improve for this paper. Thank you.
Okay, thank you very much for your presentation,
Yes.
Ms. Idranita.
Yeah.
Okay, actually, I enjoy reading your paper. Okay, your paper actually have provide a detailed explanation on the motivation. You have a clear motivation of study and also the objective, and also you also explain in very detail the research methodology part. Okay, I really enjoy reading your paper, but I have a few comments on your paper. Okay, let me share my screen okay, to show my comment. Okay, I noticed in your paper here, there are a few mistakes. Okay, the first one is in the regression model number 1. So there's one independent variable, okay, SRMGT, okay, you in your first regression model, but then when it show in the descriptive statistic table, then it's another variable. So I do not know whether these are the same data you have collected for these two different variable, and I'm not sure whether these two variable are the same variable or not. Because in your descriptive statistic is SRISKM, it's not SRMGT. So this is the first one. And then the next one is similar in the regression analysis table, but you don't put down the table number. This is on page 25 to page 26. Also, you have a different name for your independent variable, SRISKM. So perhaps you may need to look into this, see whether they are the same or not. Okay.
Okay.
And also, when you present your data in this table here, so I noticed that those variable which is significant, some you put down the asterisk, but some you don't put down the asterisk. So there is inconsistency in your presentation, okay, of your information in the table here. So you may need to look into this also. And then another thing is on the number of observation. So it's not the number of observation. The number of observation is the next one. So now I look at, you see in this table here, so this one for ACCOM, right? This variable actually is not significant, isn't it? Right, not? It's not significant. Okay, but then in your explanation, in your data analysis part, you explain that there's a negative significant relationship. Okay, so you may need to look into this as well. Okay.
Yes,
Okay.
Okay.
Then the second one, my second comment is on the number of observation. So you have identified the 44 bank listed on the Indonesia Stock Exchange, and you have chosen 10 years for your study. So in total, you're supposed to have 440 observation, but in your methodology, you explained that there are only 404 observation. So I believe you have eliminated some of the of the number of observation due to some reason, right? So maybe you need to explain, okay, what are the reasons you want to eliminate those observation from your study? Okay, and you're explaining you are using the unbalanced panel. Okay, you're using the unbalanced panel for your study here. But you see, here you explain that you use the 404 number of observation. Then you show this in your regression table. Okay, the number of observation is 354, which is different from what you explained in your methodology. So you may need to look into this as well. Okay, similar to the sensitivity analysis. So the sensitivity analysis, number of observation is 360. So you may need to explain why there is a difference here. Okay.
Yes. Okay.
And then another thing is number 3. Okay, in table 7 on page 25, you show a table to show the collinearity test between the independent variable and the dependent variable. But I don't understand why you don't show all the independent variable. Instead, you just show one independent variable, which is SAWRX. Okay, so why other independent variable like the intention, the awareness, intention, integration, and implementation, why you don't show their correlation between the dependent and this independent variable? Okay.
Okay.
So I would think that it is important you need to show that, okay, to see, okay, which variable it will have a relationship with the dependent variable here. Okay.
Yes. Thank you so much, Prof. Ki. Is this
Okay.
for me to comment?
Wait, another one is okay, another one is this one is in the on page 15. This is the framework for the development CSM model. So you see here, you have the sustainability intention 7 item, 28 sub item here, right?
Yes.
And also for the sustainability integration, you have 13 item, 54 sub item. For sustainability implementation, 13 item and 45 item here for phase 2. But then in table 2, here the number of sub item is different from what you present in your figure 3. Okay, so you may need to look into this. So another thing is in table 2, you see here, you have 54 sub item here. When you show in your formula to work out the INTGS, the number of sub item you use is only 48. Perhaps you need to explain why you don't use 54, you use 48. What happened to the rest of the sub item? Why you want to ignore those sub item in the calculation of INTGS. Okay, similar to another formula. Okay, the last one, the overall SA index, the total sub item is 127, but in your formula you use 128. Okay.
Yes.
So that is my comment. Basically, your paper, actually, this research is a very good research work and also very interesting. So the only area you need to look into this are those typo. I believe these are the typo. Okay. So no, Aurea, do you allow participants to ask question in this case here, because the time is already over? So let me stop sharing.
Yes.
Thank you so much, Prof.
I'm sorry for this.
So I think we should end our session here. Okay, then we move on to another section. If the participant have any question on this research, maybe you can send an email to Chair Idranita, and then she will reply your question accordingly. Okay, so thank you very much.
Okay, thank you very much, Prof. Ki.
Okay, thank you.
Yeah, thank you very much to Dr. Hawaiki for leading the session and Ms. Idrianita Anis for presenting her paper. Next, the third paper presentation will be delivered by Dr. Shendra Kanagasa Bapati from Sunway University, Malaysia, and will be moderated by Dr. Ratna Wardani from Universitas Indonesia. Ibu Ratna is a lecturer and researcher from Fakultas of Economics and Bisnis Universitas Indonesia. She obtained her doctoral degree from Universitas Indonesia in 2009. Currently, Ibu Ratna serves as a member of the working group of the Governmental Accounting Standard Board, or Government Accounting Standards Committee, KSAP, the Audit Committee of PT Adikarya Persero Tbk, lecturer and researcher at FEBUI and several consulting companies. Ibu Ratna has also published several publications in the form of books, national and international journals. The number of articles published in Scopus Index journals is 26 articles. Without further ado, I would like to invite Ibu Dr. Ratna Wardani to lead the session.
Ibu Nur Aulia Rahman for the introduction. For this session, we're going to hear the presentation about the paper. The title of the paper is Challenge of Preparing a Sustainability Reporting Evidence from the Malaysian Experience. The author of this paper is Howaiki Susila Devi, Vivi Nora Slina, and Dr. Senba. We're going to hear the presentation first, and then maybe after the presentation, we're also going to have a discussion. And if the participant would like to ask question about this paper, we are welcome to the question and discussion. I would like to offer Senba to present the paper. Please, Senba.
Thank you, Pon Ratna. I hope you all can hear me. Is the audio clear?
Yeah, very clear.
Okay, thank you. Give me a minute.
Yeah.
Okay, I hope you all can see the slides. Yeah. All right. Just now we had 2 sessions of numbers, a lot of numbers. Okay, we can just relax a bit. Here we have no numbers, but of course this is also on sustainability. The challenges in sustainability reporting and evidence from Malaysia is an exploratory research authored by Dr. Howaiki, Professor Susila Devi Kesupaya, Ms. Vivi Norzarlina Mohammed Siddiq, and myself, Shenba Kanasbabke. Okay, so we are going to look at the same topic that has been, earlier discussed in a different perspective, but this is about the, as I told you, this is an exploratory research. So we can see a lot of literatures and how the research had been led so far, and how is it going to take for, how is it being viewed from the Malaysian perspective. Okay, so give me 1 minute. Yeah. So the environmental issues entered into the international agenda in the early 1970s, though the businesses were viewed as responsible for sustainability, even though the word wasn't coined, but there was corporate responsibility was given or was expected from them for the past 2 centuries. But then it has had a proper shape, and it has an international agenda in early 1970s. And obviously Malaysia also had its journey started from 70s. So in 1972, we had the Sustainable Development Goals Knowledge Platform. In 2019, they say the United Nations Environmental Program coordinate UN environmental activities, and they help developing countries implement environmentally sustainable policies and practices. Okay, so there were 17 SDGs. Give me 1 minute. Let me just change the view. Okay, so the United Nations General Assembly established the UN environmental activities, and there were 17 Sustainability Development Goals, SDGs, to end poverty, protect the planet, and ensure all the people enjoy peace and prosperity by 2030. But anyway, unexpectedly, 2020 brought us all together to get us locked down. There was everybody were in the same boat. But then the goal at 2015, when the SDGs were developed, the major aim was very noble. It's poverty, protect the, end poverty, protect planet, and ensure all people enjoy peace and prosperity by 2030. This was the SDGs. So Malaysia integrated the SDGs in its development plan, and covering poverty reduction, energy, productivity, healthcare, housing and education, transportation, and various economic sectors. Okay, and the major milestone which is viewed in Malaysia's journey of sustainability is the 2015 Bursa Malaysia Security Berhad is one of the major milestones. They launched the sustainability framework in 2015. In KPMG International Survey of Sustainability Reporting, they say 99% of the top 100 companies in Malaysia publish sustainability report specifically on the perception that ESG related risks are limited to compliance and reporting. Okay, then you can see from the introduction that there are 99% of the companies of top 100 companies are already complying. It's very good news. Then why there is a necessity for this paper? Obviously, yes, because we are really looking at the substance of sustainability reporting, and the focus and the usefulness and the seriousness of sustainability reporting was one of the major things that has been the background factor for us to initiate this research topic. Okay, so the literature we had seen here is actually, sorry. There are challenges, preparers faced in preparing sustainability reporting. That's the key term, and that's the key word for us to move forward with this research. So the companies, you can see the highlighted words. If you couldn't read, it could be easier for us to gauge what exactly was our focus. So when the preparers faced preparing sustainability report, is that a big deal? Obviously, yes, because we need a sustainability report which is substantially good and useful, and it is fair. Okay, and it is fairly reported and transparency is ensured, and then we are moving towards the sustainability goals. The world is really aiming at, though with all the hindrances, we are really aiming to, improvise. The whole world has to go together in attaining the sustainable performance, and in that regard, the preparing of sustainability report has, as one of the author in 2015, he said it was eventually detracting from producing a piece of impactful information. That's the word. So the impactful information wasn't there. So this was one of the major problems. So number two, because the companies were not connected with the intended stakeholders. Stakeholders could probably be divided. We know very well that internal and external stakeholders, but from the perspective of reporting, we can see the investors and all the stakeholders. We can divide them into two, the investors which are existing and the potential, and we can also see the stakeholders in general. So the reports or the sustainability reports were not connecting because they were not having impactful information. And there was a lack of support from the board members and the management, as Dominguez mentioned. And another major problem in the literature we could see is a difficulty in quantifying the sustainability data. So if there are no numbers, normally it is very difficult to establish our claims or our stand on anything. So normally quantifying the sustainability data is one of the major criteria, and the preparers encountered a lot of problem in quantifying the sustainability data. An underdeveloped sustainability reporting system affects a company's ability to gather accurate data and capture reliable information. So this was observed by Safari and Arib in 2020. And another major observation is, out of the 100 largest companies in the Fortune 2000, lack specific sustainability knowledge. This is something really very worrying factor, and this is a very recent survey too. This serious lack of relevant environmental, social, and governance expertise, which is ESG, we call it, the environmental, social, and governance expertise among the Fortune 100 board directors was something that was highlighted by Whelan in his research. So another observation in the literature also captures the directors fail to exercise their stewardship role in a company, because that's one of the major thing as a board or as the board of directors has to really exercise this. Okay, and then this is the international scenario. The literature was really gathering all the information what was happening around the world in terms of sustainability reporting. So no part of the world was exception. Probably some were really getting closer to the accuracy. Some were really trying to get closer to the accuracy of sustainability reporting. But yet, what's the scenario in Malaysia was our matter of interest. So there has been an increasing trend of research and publications on sustainability reporting. after the Bursa Malaysia's, Stock Exchange of Malaysia's sustainability framework in 2015. In 2018, they have issued, an amendment was done, and then there were current case studies were included because the intention of the Bursa Malaysia was to give the users a sample or the current case studies and some template to use. So the Sustainable Development Goals, references and recommendations of the Task Force on Climate-Related Financial Disclosures, TCFD. So this was actually the 2018 improvement really gave to the users. And then the literature on sustainability reporting in Malaysia has focused on only few areas so far. We can see it has focused on the sustainability assessment. It has focused on the quality of sustainability reporting. And there was focus on the firm performance and sustainability reporting, and then sustainability reporting and stakeholder engagement. These were the popular topics so far in sustainability the research papers had been viewing. And there is a limited evidence from Malaysian setting as to what challenges the preparers, what are the challenges the Malaysian preparers face. So this is the gap the research has really found out. So this is exactly the intention or the objective behind this paper. So there is limited evidence from the Malaysian setting. These Malaysian preparers, what are they facing is actually, only big four companies were really focusing, and then they were suggesting, they were conducting researches in this regard. Generally, there was a lack of research on this particular scenario. Okay, so the theories that were used is the institutional theory and also the stewardship theory. And stakeholder salience theory and legitimacy theory were also used at the surface to decode the research outcome. And the research objective. So as I told you earlier, it was quite a lengthier introduction, I guess. So the research objective is to identify the challenges faced by the preparers from Malaysian public listed companies. So this is an exploratory research using qualitative techniques. And we had conducted interviews with open-ended questions with the heads of companies responsible for sustainability. And we have identified the Bursa Malaysia Security Berhad's list of top 100 companies, which was gauged by market capitalization. And also another criteria we had looked into was ACCA's Malaysia Sustainability Award. Why this was considered is actually, to be qualified as a winner in MASRA, the companies are required to prepare their sustainability report in 10 criteria. Okay, so the 10 criteria is something that gives us a focus in for the preparers. So if as a preparer, if we need a focus to do or to prepare the sustainability reporting, there were 10 criteria were given, and on that basis, the MASRA awards were given. So that was also taken as a guideline. So for the purpose of this, if you can see these 10 points, I'm sure that you all, we can understand all these things like organizational context, stakeholder inclusion, materiality, the scope, governance, strategy, management process, performance, assurance, and communication. Out of these 10, I would like to, for the presentation purpose, I would like to explain the 10, but I think I'm sure that we will definitely be going out of time. So let me just take the highlight of it, the materiality. What is materiality in terms of sustainability? Okay, so in the Bursa Malaysia's guideline, it is explained that if the sustainability matters are considered material, if they reflect the organization's significant EES impacts. We are not using ESG because ESG is environmental social governance. EES is economic, environmental sustainability. So this is what is insisted. Why are we really thinking that Bursa Malaysia doesn't bother about governance? No, that's not the fact. They are also, of course, it is EES and ESG is actually used interchangeably, but the governance is covered widely by MCCG, the Malaysian Code of Corporate Governance. So the materiality is actually specifically mentioned. It is considered material if the organization's significant EES impacts are reflected, and then there is a substantially influence, there is a substantial influence on the assessment and decisions of your stakeholders. So if there is an influential factor that will definitely affect the stakeholders, then probably that will be considered as sustainability matters that are really materially effective. Okay, so these are the 10 criteria that was really focused in the Masra Award. So this is also taken as one of our criteria to look into or to analyze into or to choose the companies to interview. Okay. And in the methodology, we had the list of interviewees we could interview. It was a very detailed interview with every heads of the companies, directors, and then people, those who are heading the sustainability department, and the directors of sustainability committee, and some were really acting as consultants. So there were 10 interviews were done, and it was a quite detailed an interview. Some of them really even gone more than the time, and then they had really provided us information, and even they asked us some input also, like, from our previous study, what could we really support them with. Okay, one of them really asked, how do we really quantify, is there any input that we could really give? That was one of the feedback that I would like to share also. So anyway, the researchers identified the criteria, the board leadership, board expertise, management expertise, and attitude of the board and management, and how do they quantify the sustainability impact, and how effective is the sustainability information system. So obviously, to decode this, we used Envivo. And the research findings, obviously everything that all the 6 criteria wasn't really so encouraging. There was a lack of board leadership, lack of board expertise and management expertise, and negative attitude of the board and management, difficulty to quantify the sustainability impact, and lack of effective sustainability information system. So to put it in some of the views that the directors were discussing with us when we were interviewing, they were really saying sustainability has not hit the main agenda of the board yet, because it was in some companies it is still viewed as a cost. It's a factor giving you more cost, additional cost, and then they don't see the relative necessity for sustainability to be put as a main agenda. They see sustainability as a matter of disclosure, or they are willing to give sustainability on surface, but then they wouldn't, the board is not really encouraging so much, as they have their own problems, like there is lack of expertise, there is lack of guidance, there is lack of regulatory side support on quantifying the sustainability impact. So there is lack of the sustainability information system. So all these things were put forward by the board, and so they are not moving forward in bringing up an effective sustainability reporting. But obviously things are changing from the time we had conducted this research, and then things are moving. To some extent, we have to thank COVID in that sense, because everybody is now looking at the factor that the companies need to really invest on the environment, and the sustainability. So anyway, the results, the conclusion are the major reasons that we would like to explain here is the negative attitude of the board and management is considered for the failure in the identification of correct metrics, as the indicator of sustainability, to quantify and measure the sustainability impact of an operating system. And then the lack of an effective information system also can jeopardize the sustainability reporting process, and it can fail to produce an impactful sustainability report. Obviously, when the major problem that was viewed was there is a lack of expertise, and then lack of the drive to change fundamentally. And then also the major problem that was viewed is there is no enough information system or the IT support or the software support, or also there is a lack of regulatory guidance also is being viewed here. So the various framework and standard setting institutes actually generally that was asked by the company, many companies were using GRI as the Malaysian, the Bursa Malaysia's framework explains, GRI is for all the investors. So mostly all the companies that we have, almost all the companies we have interviewed, they were aware of the requirement and the necessity of sustainability report, but they were helpless on few things. Number one was there was a lack of expertise, and they needed serious training programs, and they wanted a sustainability culture, and also they had the major thing, the very major thing was how to quantify the information. Okay, so all the companies in general, they were using a GRI as their measure, and the recommendation that we would the future scope for the future research is, there is a need to establish a board policy to ensure effective sustainability reporting. And if there is an absence of board policy, that may not give the engaging of employees, or it doesn't give the purpose for the employees to really work on with. So it need to establish a board policy to ensure effective sustainability reporting, and then training the preparers of sustainability report preparers. We need they need a training specifically, even including, this may even come for the assurance also. No, on the audit side also this could be necessary, and effective and applicable guidelines to interpret the sustainability data and to quantify the data, and then the IT support to accommodate the huge data and to effective software assistance to prepare the sustainability report, and engaging the employees in the sustainability reporting process. All were out of the findings we had, these are the conclusions that we could make up, and we could recommend all these things are necessary for making the boards more responsible, more, they could really get involved in all these things if particularly all these recommendations are provided to them. And then
I think Sandra we lost her.
Sandra lost the connection?
Yes, I think so, Bu Ratna.
Oh.
Perhaps we can just continue because she's almost at the end.
Yeah.
So maybe we can just listen to a comment from Bu Ratna, Prof. Susila?
Yes.
Oh,
okay.
Okay. Okay, I would like to share my comment. Yeah. Can you see the PDF file?
Yes, Bu Ratna.
Yeah, okay. Thank you. My first comment about the Senba and also the authors list the table 1. It is about the listing requirement in Bursa Malaysia, but I think there are no discussion between no discussion about the difference between the main market and also ACE market here. Yeah, I don't know whether this table is relevant or not in this research. Because in this table we can see that the listing requirement between the two market is the same, right? The requirement in the main market is include sustainability statement in annual report, and in ACE market also include sustainability statement in annual report. So I don't know whether this table is relevant or not. If this is relevant, I think the authors should provide a discussion about it. Okay, the next comment is about sorry, yeah. In the research method, the authors stated about the Bursa Malaysia Securities list of top 100 companies. And then it also mentioned about the companies that participate in ACCA Malaysia Sustainability Award or MASRA in 2017. there are no discussion about the link between this company, a company that participate in this award, with the sample. Yeah, I don't know whether the interviewee, this paper mentioned in table 3 about the list of interviewee. There are 10 interviewee. Whether this interviewee is contacted based on this participant, yeah, based on the MASRA participant. And also, I cannot find any connection between the criteria that mentioned in this paper. This paper mentioned about 10 primary criteria for SCCA MASRA's award: organizational context, stakeholders inclusion, materiality, scope, and also Senba already explained about it. But I don't find any discussion that relate to the themes that being researched. Yeah, this paper basically research about or interview on 6 themes. Yeah, the first one is about board leadership, board expertise. The third one is management expertise. Attitude of the board and management, quantify or sustainability impact, and effective sustainability information system. I don't find any discussion about the criteria that are being used by the MASRA's award with the team that are being interviewed to the respondent. I think the authors should discuss about this, whether the interview also connect or relate those criteria in their interview. And the table 3, yeah, table 3 explain about list of the interviewees. How this number of interviews link to the company that participate in MASRA, and there are no discussion. As I already mentioned before, there are no discussion about no discussion about the theory or the previous literatures that support the development of these themes. How the authors come up with these 6 themes, and how this link to the criteria of MASRA. And the discussion about how you develop the interview question. So you have themes and also you have questions, right? How do you link the question with the themes, and how do you link the theory and previous literature with these 6 themes that you asked to the interview. And the interviewee consists of directors, head of department, and head of department of sustainability, and also consultant. Can the discussion also relate to the different perception? Maybe the interviewee, because they play a different role in the sustainability reporting, maybe they also have different perceptions. Yeah, between there are different perception maybe between the directors and the consultant, for example, something like that. But in this paper, there are no discussion about the different perception. And my last comment is that in qualitative research analysis, it will be interesting if we can present the interview result based on each issues within the team itself. For example, when you discuss about board leadership, first you can explain what are the issues within the board leadership in sustainability reporting. And then you can present the interview result and summary of each of the issues. So maybe by using this mechanism, you can provide much more insightful discussion, and you can also compare to the answer between a group of interviewee. Maybe there are different comment or different opinion between the head of sustainability division with the consultant, for example. But above all, this paper is very interesting because it provides quite deep analysis, about the challenges that are being faced by the Malaysian company. I think this also relevant to Indonesian context because we are facing the same challenge basically when preparing a sustainability report, as the author mentioned, Senba mentioned before, that the sustainability report is not yet become a board agenda. Maybe it is the same with Indonesian context. So I think it will be also interesting to make this research within Indonesian context, because we facing maybe the same situation. And in Indonesia, for example, the regulator just required the listing company to make a sustainability report in 2020, mandatory in 2020. So maybe the development in Indonesia is not as advanced, not as advanced in Malaysia, but the challenge is quite the same, about leadership, about the difficulties in quantifying the sustainability impact, and so on. So that's are my comments. Maybe from the audience would like to ask question about this paper. Ini karena Senbaya nggak ada, gimana Ibu Aulia?
Shenda already here, Bu Ratna.
Oh, already here. Okay.
Hello, Dr. Shenba. She said that she's already in now.
Hi, Dr. Anklan. Yes.
Oh, okay.
On my video because I'm worried that I might be kicked out again.
Okay. Senba. So Senba, can you hear my comments?
Yes, I heard it. Yes, I will take into it. I'm sure that I will get the recording and to get the full feedback. I had just joined yours, but then I take all your views and they were very useful. For Ratna, it was few things that that I could hear is the criteria, the context, or in which context we had chosen the criteria. Yes, we need to justify that. I truly thank your feedback, and it was very, very useful and it was very insightful. Thank you so much.
Okay, thank you, Senba. Yeah, I think it's very interesting.
And I'm sorry that I couldn't complete my presentation. I'm so sorry to the rest of the audience.
Because you already at the end of your presentation, right?
Almost.
Almost at the end of the presentation.
Yeah.
You can get the presentation quite good.
Yeah. Thank you so very much, Ratna. It was very useful, very insightful. Thank you so much.
Okay, thank you.
Yeah.
Do we have any time to question and answer if the audience want to ask question?
I don't think so, Bu Ratna.
Okay.
Has run out. Sorry.
Okay.
Yeah, already I think running out of time. Maybe God saved us.
I give time to Bu Alia.
Thank you very much, Ibu Ratna, for leading the session, and to Dr. Shenba for presenting the paper. Our last paper presentation will be presented by Mr. Revin Dimas Pratama from Universitas Indonesia and will be moderated by Dr. Eng Shirley from Sunway University, Malaysia. Dr. Eng Shirley is a senior lecturer at the Department of Accounting, Sunway University Business School, Malaysia. She holds a PhD in accounting from RMIT University, Australia, and has more than 10 years of experience working at various accounting firms and academic institutions across Malaysia and Australia. Her research interests lie in the areas of international financial reporting standards, corporate governance, and sustainability reporting, and has published articles in peer-reviewed journals and book chapters. I would like to invite Dr. Eng Shirley to lead the session.
Thank you. Thank you, Noalia, the MC, for your kind introduction. Good afternoon to everyone, and I hope everyone is doing well and safe. It's a great pleasure to be invited as a moderator or discussant for the second day of the Joint Accounting Symposium. Okay, today will be our very last final presentation, and it will be on an interesting topic. Mr. Rafin Dimas Pratama from Universitas Indonesia will be presenting on the topic, the impact of corporate governance index and monitoring board on sustainability performance, focusing on Asian 5 countries. Okay, before we get started, I'd like to remind that the presentation will be delivered within 20 minutes, strictly 20 minutes because we are running out of time already. And we will allocate the remaining 10 minutes of the session for Q&A and also for discussion. Also for the rest of the audience present here today online, if you have any question regarding the research presentation or topic, feel free to post your question in the chat box. Okay, so we will discuss the question later. Okay, well, I do not want to take too much of your time. Now I would like to invite Mr. Rafin to present his topic. Thank you, and over to you, Rafin. The time is yours.
Okay, thank you, Ms. Shirley. Let me share my screen. Is it already clear for my screen, my presentation?
Yes, we can see your presentation slides.
Okay. Assalamualaikum warahmatullahi wabarakatuh. Good afternoon for all participants in this symposium. But first of all, I want to clarify a little bit about the research paper title, because I totally don't know why my title research is changed. But actually, my research paper title is Analysis Effect of Governance Quality in Country Level and Firm Level towards Sustainability Performance. I think the last part is already correct. I will research in the ASEAN 5 countries. Okay, let me move on to the next slide. So this research will be examined related to country level and firm level governance qualities towards sustainability performance, because prior literature mostly talk about sustainability and relating to the governance. And sustainability itself has been defined by World Commission of Environment and Development, which is said as a development process that meets the needs of the present without compromising the ability of future generation to meet their own needs. And the concept of the sustainability in the next year and in the few years, and they begin in the 2000, in year 2000, UN also created Millennium Development Goals, the predecessor of SDG, and based on the MDG report in 2015, the result was showing that the MDG couldn't give satisfaction in terms of achievement, even though the lives of people, of million people, had been improved at the end of 2015. And started in the 2015, that is SDG has been issued, but the challenge still remain. The implementation SDG, as we know, need a huge of financial resources, and I think the banking has a vital role to enact a sustainability approach when they are doing investment and financial decision. And this is the new topic related to the sustainability, which is called as sustainable finance. And if we are seeing it from their operational activities, banking does not have much direct impact on the environmental or social as well. But the banking has much more stakeholder. It is one of the many banking characteristics that if we if we already know that the banking has much more stakeholder than other industry. And from this point of view, I expect that banking can influence other companies by giving them a requirement to do even in 3 aspects of sustainability when they want to receive financing or investing from the bank. So the governance itself, mostly from the previous literature, is trying to connect with sustainability because it is one tool that can help companies or government to implement sustainability strategies more effectively and efficiently. Therefore, this research want to know how the banking sector try to engage in 3 aspects of sustainability, such as economic, social, and environmental aspect, but it is not suited to the SDG goals. And this is a research that use ASEAN 5 sample because from the SDG report, this region has a slow progress relating to the SDG and tends to decline. This is based on SDG report in 2017. So why we are using to 2017 and until 2019 period, it's because some of the country in the ASEAN 5 already issued some of the regulation or policy relating to the sustainability in the financial or etc. Contribution of this paper for policymakers particularly need to actively give counseling and maintenance because SDG it is actually international goals. So the country needs to focus on how to improve company initiative to align their CSR activities into SDG goals. And for banking itself, banking need to pay attention to the effectiveness of their internal governance and strive to use stakeholder opinions as a guide in the realizations of SDG goals. And for the literature, also this research want to shed the light on how both governance mechanism interact with the other in terms of improving a company's sustainability performance. Because based on the literature review that I have done before, most of them partially using governance either from level or in the country level. So in this research, I will combination between 2 of them. So this is the best of theory that I will use to representing as a country level governance. Because the international theory mostly said about every company business activity is influenced by the regulation and the presence of non-governmental organization that oversee company behavior. So if I coins or summary related to the previous literature, mostly they said that if a country have an action or have an effective sustainability, it can also motivate the company in that country. So I assume that when the institutional environment in the country is effective or it is better, the sustainability performance companies is also will be better. And I have a hypothesis because I divided the sustainability performance aspect into 3, which is economic aspect, a social aspect, and also environmental aspect. I hope the country level government will improve sustainability performance into the better condition. And for the firm level governance, I will use stakeholder theory. It is because most of the previous literature related to governance has been talking about a positive effect on sustainability performance. FY, for your information, in the corporate or in the firm level governance, I use some characteristic of board of director, such as board independence, board size, women in board, and also a frequency meeting of the board. Board of size, from the previous literature, most of them said that when the board size has a higher composition, it can give some insight into the board related to the issue of sustainability, of course. And when the board independence was higher, GZ et al. In 2014 states that the board independent is showing as a transparency symbol and can give a good improvement in a long-term period. And also in the woman in board sometimes is trying to connect with their personality that concern in social issue. Women also tend to have modest, transparent, social and environment responsiveness to improve sustainability performance. And about the frequency of the meetings, given the previous literature, said that the high level of the meeting will pay more attention to social issue. Even though this is mostly talking about the a positive effect into sustainability performance, previous literature is also has a mixed result. They sometimes found no significant effect. Sometimes they also found the negative effect. But in this research, I have a hypothesis that firm level governance will improve sustainability performance into the aspect of sustainability. So this is the data and the methodology which is I use in this research. The sample, as I already mentioned before, the sample of the research using a banking sector in ASEAN 5. The countries are top 5 countries that have a high gross domestic product. Consists of Indonesia, Thailand, Malaysia, Philippines, and Singapore. And the period, the research was 2017 until 2019. And about the data, I already mentioned before, quality of governance in the country level was collected from World Governance Index, which is issued by World Bank. And the quality of governance and firm level was collected from companies' annual report. And the sustainability performance was collected either from companies' annual report and sustainability report, because some of the company don't have sustainability report. So I instead will using the annual report. And the methodology, this research will examine with quantitative with the data panel regression, and the data was collected by secondary data. So this is the quantitative research. And for the details of the variable that I have used in this research, I will go to the next slide. Okay, this is the model. Like I said before, I divided sustainability performance into 3 aspects, which is economic, social, and environment. I'm testing the variable between independent and dependent CG Gulf and CG firm together. For the measurement of the SDG performance, I'm follow Bali Swen and Yang Valentin in 2020 and also Gunawan 2020, which is Bali Swen has already done to examine which is SDG goals that include between 3 of the sustainability aspect, and they are using a PCA and IFO analysis. Based on the analysis, Bali Swain finally found that sustainability performance for economic aspect has 12 SDG goals, social aspect 5 SDG goals, and environment aspect has 6 SDG goals. And how I determine to which is the CSR initiative aligned with the SDG. I followed the Gunawan papers in 2020 and trying to scoring the disclosure of banking related to the SDG and sustainability performance. And related to country level governance quality, I'm following the Manning's papers in 2080, which is he has also 4 dimension of board characteristic and converted the score into the dummy variable, which is I will give 1 if the value of the for instance board size more higher than median, and it also applied to all the dimension of country level country level governments. And the firm level, I also use a method in the Manning et al. Papers, such as in governance levels, country levels. And I use some macro and micro control variables, which is GDP, inflation, and size of the company or banking, market to book ratio, and return on asset. So this is a descriptive statistic that I have created based on my data. It is consists 216 data with 3 observation period. From the table 3, I highlighted about SDG, economy and social and environment, which the banking in this sample has supported more than 18% SDG goals in each 3 sustainability aspect. And the data shows a quality of government at firm level is showing higher than at country level, and this is imply as most of companies have higher composition in board independence, board size, women in board, and also frequency of the meetings. And related to the correlation table in table 5, I have found the correlation between 3 aspects of sustainability seems higher, which is implied when companies have a good performance in one of the 3 aspects, it can influence another aspect. The level of significance is 5%. There is a nonlinear correlation between quality of governance and at firm level and the country level that occurred substitution condition from both of them. And the firm level governance has also positive effect on all 3 sustainability aspects. And the inflation rate in the country show a negative correlation with all the variables. So the table 5 showing to us that CG Gov or governance country level governance has a positive effect toward economic aspect, and that align with SDG. It is consistent with examined partially in the column 2. From this table, I want to resum that CG Gov or governance level, country level governance has a positive impact to sustainability performance in the companies. But in the firm level governance quality, it has a negative effect. And the bigger banking size, the more the banking has initiative to support SDG in the economic aspect. And related to the macro control variable, inflation rate has found a negative effect towards sustainability economic aspect in all column. And GDP, however, has a negative 2 toward the sustainability economic aspect. Next. To the table 6, it is related to the social aspect, which is the result is almost same with the previous table. CGGov or country level governance has a positive effect toward social aspect. It is also consistent with examined partially in the column 5. The firm level governance quality is also has a negative effect. Same like a previous table, which is which is examined with the SDG in economic aspect. And in the macro control variable, GDP or inflation are showing that economic condition doesn't give much effect when the companies try to engage related to socially activities. And the last table about the result in the environmental SDG, country level government quality has a positive effect toward sustainability aspect. Again, it is almost the same like table 5 and table 6. And it is also consistent when examined partially in the column 8. It is also has a same result in the firm level governance, marginally negative significant relationship with sustainability environmental aspect. And the size of the banking also has a positive effect, even it is has a relationship with the economic or social or environmental sustainability aspect. So the conclusion is it is aligned with the argument from previous study, such as Agamang et al. In 2015, which is he said that the existence of governments has an important role in motivating companies to behave ethically, even the condition of firm level governance is low. The result is also in line with institutional theory that every company's business activity is influenced by the regulation and the presence of non-governmental organizations that oversee company behavior. And there is a substitution condition when the quality governance at firm level was low, quality of governance at country level need to be high to enhance sustainability performance. And it is also company with a bigger size. They have more power to doing a CSR initiative, and maybe it is aligned with the SDG goals, even in the economic, social, and environmental aspect. Country economics condition based on the result is not an obstacle for company and Asian 5 to do CSR initiative that align with SDG. And the limitation of this research is I don't use frequency how much the banking doing CSR initiative that align with SDG. Maybe next future research can doing like this to know how many company initiative or banking initiative that align with SDG. The interpretation related to the relationship between firm level governance and sustainability is not analyzed deeply, because in this research I am using a composite score, so I can break down the analysis into the dimension of the board of directors, but previous literature has already done that, so this is actually new for me to composite the score of board characteristic. And the process of measuring sustainability performance according to the SDG is only done alone, because this is a part of my thesis, and I'm scoring a sustainability performance alone, and I don't have any parties to doing the same like I doing to sustainability performance. So maybe the next or the further research can also use validity and reliability tests related to sustainability performance scoring. Okay, that is the end of my presentation. Thank you.
Yeah, thank you, Rafin, for your wonderful presentation. Straight to the point as well. I would like to applaud for your effort here. Good effort. This is a very interesting research topic that you explore corporate governance and also sustainability performance, right? And your research actually add into a new dimension to the previous study where you explore qualities of corporate governance, not only at firm level, and you mentioned that also you analyze at the country level as well. So you test it against sustainability performance. So you look at economic, social, and environmental, right? And also you focus on the 5 Asian countries. Your study also follows the institutional theory and stakeholder theory commonly used in sustainability research here. I will, as a discussant, I will just like to make a few constructive comments here. Future research can be designed to overcome some of the limitations like you already addressed in your presentation there. Firstly is regarding your sample selection. Okay, maybe I would like to share with you the table here. Okay. Okay, so this is your table, right, for your sample selection.
Yes.
And you can see here that you choose the 5 Asian countries: Indonesia, Malaysia, Philippines, Singapore, and Thailand. So I noticed that your banking sample that you have selected is not actually equally distributed between the 5 Asian countries. So more samples is actually selected for Indonesia. So you can see there are actually 40 here. And then whereas for Malaysia it's only 5, and then Singapore is only 4 banks here. Okay, so and then you run it into the regression model and you have significant findings, right? So based on this argument, I might afraid that your significant findings of your study might not really reflect the whole 5 Asian country as a whole. It could be the result skewed more towards Indonesia because Indonesia banks make up 50% of your sample size, right? So that is my main concern here. So what I would suggest that it could be better if you increase the sample size for other countries, especially for Malaysia and also for Singapore. So that is my first comment. Okay, my second comment is regarding your observation here because you collected sample from 3 years period, right? 2017 up to 2019. And I think how do you collect the banking sample is you use purposive sampling, right? So purposive sampling would mean selective sampling. Selective sampling might actually limit you to fewer firms selected and also could lead to a lower observation, right, for the period of 3 years. So it could be that's why you get such a low sample for Malaysia or for Singapore. So I think maybe better option could be maybe you try to widen your sample selection, like you choose maybe this is just a suggestion, like top 100 banks in each of the 5 Asian countries. And then from there, this is to ensure that you have higher sample and equal distribution. So this observation years, you already explained that you choose it because there are some regulation changes, right? It could be, but some countries have different regulation changes for their sustainability performance. So it could be you might want to extend to more years instead of looking at 3 years only. Okay. Another thing is, okay, your dependent variable is okay because you are testing on the SGD goals, right? And you test on like under performance, sustainability performance, you have environmental, social, and economic, right? Maybe sometimes under environmental, for example, you can, for future research, maybe you can test in detail, like maybe electricity, water usage, and so on. So that will be like for future research here. Okay. Last comment here is regarding you choose banking industry, which is good because you want to test on sustainability finance, right? Maybe you want to try to expand to other industry as well, because it could be banking industry, they have good corporate governance. That's why it leads to good sustainability performance. So therefore this regression model here, you did address in your limitation that the relationship between sustainability performance and corporate governance, you have to test more in detail, right? It could be companies have good sustainability performance can affect corporate governance. So that is just a few of my concern here. Yeah, so that are my comments here, Refin.
Yeah.
Okay.
Thank you, Miss.
Yeah, no problem. Anything you want to address or add on, Refin?
Yeah. From based on my collecting the data, sometimes the bank don't have one variable such as board size or board meeting. Mostly board meeting. They don't disclose the information about that, and because of that, I will don't use the data. So I instead using of fully available data, and that's why I think the sample is relative low in another country. Instead of Indonesia is more higher than another countries.
Okay. Okay, that's good. That maybe you want to explore that maybe in the future
Yeah.
for future research.
Yes.
Okay. Do we have any question here in the chat room? Okay, looks like no question posted. So I think we are over time already. So I think that's the end for
Actually,
the last.
I think there is a question.
There is a question.
There is
Okay, wait. Hold
From
on.
Muhammad.
Oh, okay, yes.
Sazwan.
One question from Muhammad Sazwan. Maybe sample selection can be generalized provided data is sufficient so that can observe in bigger picture. So this is just a general comment here. Yeah. Okay. And then, hi, impressive findings. My question, the 5 Asian countries as mentioned, any uniqueness of this sample selection besides high GDP? Referring?
Actually, I only rely on the fact that GDP in the ASEAN 5, top ASEAN 5, because I think it has a good economic condition, because I use also country level governance. So because of the high GDP, so I choose the ASEAN 5 countries because high GDP, and there is no also reason why I am choosing ASEAN 5.
Okay, added on the question, corporate governance index as under the presentation reporting to clarify, it is the source from Asian corporate governance scorecard report?
No, I am taking the corporate governance index in country level from World Governance Index. You can search in the Google, issued by World Bank. They have complete years from I think from 1990 until 2090, and you can use the data freely.
Okay, and the final question, as cross-country analysis, what is the preliminary assumption once you conducted this study. The firm level performance will improve performance based on sustainability for all 5 Asian countries? Thank you.
There is something debate in the previous literature. Are firm level performance, such as in the board characteristic that I will focus here, has an impact in the sustainability performance, positive, significant mostly. But in this research, I have found something differently. So it means that the firm level performance will be substituted if it has a lower condition, which is a substitution with the country level governance, like I have found in this research.
Okay, so thank you, Refrin, for your comments. Okay, so I guess we have reached to the end of this session. Thank you, Refrin, again for your wonderful presentation, and thank you, audience, for your question. So I'll give the time back to MC Noor Alia for the closing ceremony. So thank you, everyone.
Thank you.
Thank you, Miss.
Okay, thank you very much, Dr. Lee, for leading the session, and to Refin Dimas Pratama for presenting your paper. Excellencies, distinguished guests, participants, ladies and gentlemen, we have had productive and inspiring time together at this event about to come to the very end. Now we will close the symposium. I would like to invite the Head of Accounting Department of Sunway University, Malaysia, Professor Raymond McNamara, to deliver a closing remark.
Thank you very much, and it's great to be able to do this. It was wonderful to be part of the opening of this this symposium, and it's a great opportunity and one to which I'm grateful to be able to do the closing address for you. I think this has been a great initiative, and I want to thank Universitas Indonesia for joining with Sunway in this event, for I think coming with us to coming to us to encourage us to be part of it. So I need to thank you for that. And I want to congratulate the organisers of the symposium, because it's been a very successful event. Unfortunately, I only got to come here for the last session this afternoon, because Thursdays at Sunway is meeting day and they seem to be endless. But I enjoyed yesterday very much. I was able to stay for the whole of the program, and I wish I could have been here for more today. It's been a very positive experience for all, from what I can gather, and I want to give a special thanks to the paper presenters and discussants, and I'll thank those individually in a moment. I think the range of academic approaches and the quality of the presentations was outstanding, and I think the quality of the discussants, which is what really makes a good conference, was excellent, because it's the area where you get the feedback that you need for your for bringing your papers to fruition. I'm hoping that perhaps another initiative might come out of this. For a long time, I've wanted to see if we could organise a journal that publishes literature reviews only. In accounting, there's very few specialist journals, whereas in psychology, you have something like the Annual Review of Psychology, which publishes literature reviews. And there's not an opportunity for PhD students to publish those literature reviews. And for those of us that teach on doctoral programs, it would be great to have a journal where we can get up to date quickly and readily on the whole range of things that are happening within our profession. So I'm hoping that maybe that might come out of this collaboration in the future. So I think I want to thank all of those that, well, I don't think, I know, I want to thank all of those that have made this symposium successful. I want to thank, now you'll forgive me if I get the pronunciations of your names wrong, but it's, I haven't had the opportunity to learn Bahasa, and I am pressuring my Chinese students at home that when they come to an online discussion session for me for the subjects that I teach, they've got to teach me a little bit of Chinese, a little bit of Mandarin when they come, and I need to probably do the same for Bahasa. Anyway, I want to thank Dr. Teguh Darnata, the Dean of the Faculty of Economics and Business at Universitas, Malaysia, for his help, and certainly Ansila Hamawan, head of the Department of Accounting, I think, who's been a driving force behind this. And it's been excellent to work with you. Not that I've done a lot of work, but you certainly put a lot of time in with the people from ours. Dr. Yulianti Abbas, who's also done an exceptional piece of work in getting this together. And I want to thank the paper presenters. I'm not sure that I've got all the names here, but Adati Putra, Wiri Andriati, Arentia Anis, and Refin, whose paper I did get to see today, which I thought was excellent, and the discussants, Dr. Sirigar, Dr. Andaharanani, and Dr. Luluk Windriati, and I think I've got another name there, Dr. Ratna Wadahani. I want to thank you guys for it. On our side of the table, of course, a big thanks has to go to Professor Sid Devi, who's the Director of the Centre of Accountability and Governance, for bringing this together and organising it all. And also a big thanks to the hard workers on our side, which were Dr. Shenbra and Dr. Kakan. Dr. Kakan's only joined us recently, but he's just a powerhouse of effort. And Dr. Shenbra is an excellent organiser and an excellent academic. I want to thank the paper presenters, Dr. Shenbra, Dr. Kakan, Mira, and Kuldeep, our PhD students who've done an excellent job. And the discussants, Dr. Waiki, Dr. Jaspal Singh, Dr. Kakan, and Dr. Shirley, whose last session, I think, made some great contributions as well to the paper. So thank you very much for attending. Thank you very much for working together to make this successful. And I hope we can do it again in the future. So thank you again. And for that, I'll bring to the end this symposium. Thank you.
Thank you very much, Professor Raymond McNamara. Okay, before we close the symposium, maybe it is good for us to take a group picture. So I would like to ask all participants to turn on the camera. Maybe Bu Yuli or Mas Farid could help to direct us.
Okay, okay, so now we're going to take another group picture with Prof. Ray now in suit. Okay.
Proper dressed.
Okay. So with everybody, if you can turn on your camera, we are going to take group picture just for a few minutes. Okay, so I have 4 frames, just like yesterday. I'm going to count to 3 and then I'm going to say money. Okay, so 1, 2, and 3. Money.
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 Okay, I'm done with the first one. Now the second one. 1, 2, 3. Money.
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 Oh, okay. Okay, I need to do that again. Okay, 1, 2, 3. Money.
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 Okay, that's the second one. Okay, and then now I'm going to take the third one. 1, 2, 3. Money.
Money.
Okay, it turns out I only have 3 frames, so it's done. Thank you, everybody.
Thank you, Bu Yuli. Thank you, Prof. Ray. Hope to see you again.
Yes, me too.
This is the end of the accounting
I'm fully vaccinated.
Thank you, Bu
Thanks to you
Azila, Bu
all.
Yuli.
So
Thank
much,
you.
everybody.
Success.
Keep in touch.
Bye,
See you
everyone,
soon.
and thank you so
Bye,
much.
everyone. Pak Waluyo.
We'll be in
Thank
touch.
you, Bu Azila,
Bye.
Bu Yuli.
The Faculty of Economics and Business, University of Indonesia, FEBUI, is a modern, dynamic, and welcoming campus, a place to study for the nation's future leaders. Situated in 2 strategic locations, Depok and Salemba, we are fully committed to contribute to the development of knowledge in economics and business, and to nurture future leaders with a sense of social responsibility and the ability to address global environmental changes. For over 65 years, we have produced the country's best graduates that will potentially play important roles both in the Indonesian government and the private sector.
So my name is Pascasarjana, I'm from Belanda, and one of the many things I like about Fakultas Ekonomi and Bisnis Universitas Indonesia is that the campus is really green. It's wonderful.
In the future, we are aiming to become Asia's leading economics and business learning center, which contributes to the development of Indonesia and the global community. FEBUI has 3 departments: the Department of Economics, the Department of Management, and the Department of Accounting, with specified courses such as
At Sunway University, we have traveled the world seeking out the finest educational opportunities, allowing you to experience a world-class education closer to home. Featuring international collaborations with Cambridge, Harvard, Oxford and the University of California, Berkeley, alongside partnerships with the award-winning Lancaster University UK, Le Cordon Bleu Paris, Alibaba Business School and Massachusetts Institute of Technology. At Sunway University, the opportunity is yours. Sunway University, truly a class above.